on this. Upgrade all. Okay, let's go. Once again, good evening to everyone on this call. Also, good morning, good afternoon to anyone that is in an area, connected from an area that is on those particular times. This class is our last class for this series of training that we started some time ago. In the course of this journey, we've been able to identify one, the actual definition or true definition of what Forex is. Forex is an acronym that stands for foreign exchange, and like every other business that we do, trading in the Forex market is also a business, but it's one business where you can make money, buying and selling, at the same time. There's a lot to trading in the Forex market, and I'm sure by virtue of this class, you would have, for those of you that started from the very beginning and followed through up to now, you agree with me that it is not it is not it is not like people may have thought of it. It's not as easy as some persons may have portrayed it to be, and also it is not that complicated as some people also portray it to be. So the knowledge, the most important thing in Forex, as far as I'm concerned, is knowledge. If you have the right knowledge, and just the same thing cuts across every other feed that we have today in this world. If you have the right knowledge, the requisite knowledge, you'll be able to trade profitably. But if you have less than adequate knowledge, you will struggle to trade. And then, as part from having the knowledge, there are some key attributes you as a person has to develop. And popular among those attributes are the ability to conquer greed, fear, emotions. These are the three core, okay? There are others, but these three, they tend to rule the market the most, as compared to others. I select these three because, it's easy for you to play with money that is of no value to you. Okay.
So you're not sharing your screen.
Did I disconnect? Let me share again. 1 minute. Screen share. Okay, can you see my screen now?
Not, we can only see the landscape. For me, I can see the landscape.
Can you see the landscape? Yeah, so that's my screen.
Yes,
If
yes,
I
you can
open
see.
something that you see. That's my screen, that's my desktop. Okay. So that means you're seeing my screen, don't worry. So as I was saying, you need to be able to manage these three items. Okay, you need to be able to manage your emotions, you need to be able to manage your greed, then you also need to be able to manage your fear. Okay. Now, this class is not essentially going to be like going through everything. We've gone through a lot, starting from this all the way to this. We've gone through a lot, and we cannot start going back, to every single item. But I will just do a quick summary, okay? And in that summary, I do hope that you are able to cash the claims of what we're talking about. So we'll talk about what is Forex, and we did say that it's foreign exchange, and we also said that critical among trading Forex, this is the most important thing we want to do. The trading process, sorry. The trading process. Okay. The most important thing we want to do is this. We want to, first of all, educate ourselves. Once we have educated ourselves to a level of comfort, we want to open a trading account. When we open a trading account, we don't just going to jump into the trade because we have opened a trading account. We want to plan our trade. And this is where, if you are able to plan your trade, you would have killed 90% of your emotion. Okay. If you plan your trade, it means that there is an entry, there is a stop, and there's a limit. Okay. These three items, once you know them and you have put them on your trade, it helps you to close your computer and go away. In that way, where you have a lot of emotional hijack is when you are sitting in the front of the computer and you are seeing that candlestick moving up and down. It's a lot of headache to take. Okay. And we talked about the psychology of forex trading, and we said success at trading is you the trader, is your responsibility, is your duty, is your obligation. And it's one, if you can trade profitably, it's one of the greatest gifts you can give to yourself or even your family. Okay, and we did emphasize that the human brain is divided into two parts, the left and the right brain. Why the left brain is filled with things that are real, the right brain is more of subjective and imaginative thoughts. That's where you don't want to be. Not that both of them, not that the right brain is bad, but if you try to want to solve life problem using the right brain, you are going to be having more complicated issues. So one thing we need to do as traders is to understand the relationship between the left brain and the right brain. And then we talked about the game of support and resistance. And we said support and resistance, we said we liken the market to two sides that are fighting, and we use the game tug of war as an example. If you can remember, we use tug of war as an example, and we say in the game of tug of war, two sides are struggling to take the lead. The same thing in the game of wrestling. One person is going to be the winner of that match. But sometimes somebody is being beaten, and all of a sudden that person gains so much momentum and start beating the next person. The same thing with the game of tug of war. You see, with your own side is pulling. Now, the whole time that side A is pulling and side B is like they are losing, is more like a resting period for side B. And when side B gain enough momentum, they will still come into that game and possibly even defeat side A. Okay, so we say we liken the forex market to a game like that, where we have a start and a finish. Both sides that are trying to control the market, they are trying to control the market using some particular set of rules. They want the market to obey some key set of rules. Okay. And then we talked about how each of these sides want to keep control of the market. And in doing that, we explain that for the market to be going up, that is, if the market is going to respond to what the boost they want, the market is going to be making higher highs and higher lows. But if the market is going to respond to the request of the bears, the market is going to be making lower highs and lower lows. And when the market is making higher high, every movement of the market to create another high is an extension, while every movement of the market to create a movement between this point B to point C is what we could regard as the resting period. So they both want to score a point, and there's a beginning and there's always an end. That's the way we like in the forex market when we talk about it as a game. So, like I did mention, if the market must go up, it must go up in this format: higher high, higher low, higher high, higher low, higher high, higher low. And if it's going to come down, it's going to come down in this format: lower high, lower lows, lower high, lower lows. Okay. And we did say the most striking thing in this in this content is when we talked about the formation of the low and the high. And we did say that the low is when you have two candles to the left and two candles to the right that are lower than center weak high. We say this is a resistance. So for me to see a resistance in the forex market, please take note of this, very important. For you to see a resistance in the forex market, it must be accounted for by 5 candlesticks. 5 candlesticks. Okay. And for you to see a support, it will also be accounted for by 5 candlesticks. So the opposite of resistance is support. So you are going to see 2 candles to the left, 2 candles to the right that are higher than center week low. That gives you support. Now take note, the market moves between support and resistance. If the market has formed a support, the market cannot form support. The market can form support after resistance. So if the market forms a support, the market must, as a matter of necessity, go and form a resistance. After the market has formed that resistance, you can now talk of forming another support. Okay, so I need you to get that because it's very key. So these are the 2 most striking part of this model. And then we talked about the Japanese candlesticks. Now the Japanese candlesticks, we did say that Japanese candlestick is the most effective tool to trade the forex market. I said when you see the candlestick like this without any labeling, it makes no sense. But when you label them, the open, the close, the high, the low, the body, it gives you some sense of direction. And I did said in our class that when the candlestick closes above the open, it is a bullish candle, and the candlestick closes below the open is a bearish candle. Both candles can be the same color, it doesn't matter. Both candles can be different color, it doesn't matter. You can select any color of your choice, nothing is restricting you, okay? But the most important thing is the open and the close. This is what will determine if the market is going to continue to go up or is going to continue to go down. And I also told you as a strategy that whenever you see that the candlestick, maybe the preceding candlestick, closes below the opening of the previous candlestick, the market has just succeeded in changing direction from bulls to bear. And if the preceding candlestick closes above the open of the previous candlestick, the market has just successfully changed from bear to bullish. That's how they take control from each other. Okay. And we talked about when you have large candles, large bearish candle to the down direction, the market will continue to trend down because each of these large candlestick portrays great momentum, higher momentum to the downside. The same thing for the upside. Even though you have a collection of both white and blue candle to the upside, you will agree with me that the bigger candles are the white, telling you the momentum of this market is going up. Okay, so that's one way for you to know whether the market is going up or the market is going down. All right. Then I did also mention that the candlesticks formation. So apart from the fact that we have candlesticks of different shape and sizes, some of these candlesticks, they form what we call candlestick pattern or formation. The candlestick formation is what we refer to as U-turn. That is where the market does a U-turn. The market changes direction, for every of those candlestick formation. And I said we have candlestick pattern that are formed by one candle, like the case of a hammer candle, a hanging man, and also candlestick that are shooting star, a lot of them, the dragonfly doji, doji bullish and bearish, the doji star. These are single candles that are decision candlestick. Okay, we group them into decision candlestick and indecision candlestick. Anyone that will make the market to stall, we say they are called indecision candlestick. While the ones that make the market to move, we call them decision candlestick. This is a full body candle. Full body candle bearish means that the market is going down. Full body candle bullish means that the market is going up. This is a dragonfly doji star candlestick. It tells you the market did come down, but because there were a lot of buyers more than sellers that enters into the market, they pushed the price all the way up. And just at this point, the candle closes, meaning the next candle that is going to form is going to go even higher. The same for this, the same for this, and the same for this. These are when we talk about single candlestick formation. They also have what we call the double candlestick and the triple candlestick. So when we say a candle engulfs some other set of candle, maybe a bullish engulfing candle, a bearish engulfing candle, we are looking at more than one candlestick forming the formation. And I said, striking in this presentation is that the candlesticks are U-turn. They show you the U-turn in the market. Okay. All right. Then we talk about drawing trend lines. We said we can draw trend lines in the up direction and trend lines in the down direction. And now, when you draw trend lines, one of the most striking thing when you are drawing trend line is that you are connecting the A and the C's of your ABCD formation. So the market starts by giving you what we call a price swing. Even though the market has done A, B, C, D, that doesn't mean that the market has ended. So now, in one of our presentation, I did mention that this ABCD is considered a game. And when you consider it as a game, what happens is that you want to win your 3 or 5 games. Okay, just like the case of table tennis. You want to make sure that if you are playing 5 games, you want to win 3 at the least, to be successful. So every of this movement from point A to B to C to D account for 1 game. Now, when that 1 game is over, we are going to start another game. But what we'll do, we'll put a line or a tie, we tie a rope on this B and pull it up. When we pull it up, this B will now replace D. This A will now replace B. We will now wait for the market to drop down to C and look for a candlestick formation that is coming from a previous resistance that turns a future support, or a previous support that turns a future resistance location, for the market to rally or move to its projected extension. When the market does that, we'll say it has completed 2 games, and we'll continue to repeat this process until the market gives us what is called a reversal. When the market reverses, it means the market has changed direction. So in order for us to draw the trend line, once the market has formed A, B, C, D, then we see when the market has not formed D, don't draw the trend line. Don't draw it. You know the reason? Remember, this your A is a low, this your B is a high, this your C is a low. Meaning that there are 5 candles here, but 2 to the left and 2 to the right, their lowest point is higher than the lowest point of the center candle. The same thing here. The same thing here. Now, when this market start moving, if you have not seen 2 candles to the left, 2 candles to the right, it means that the market has not stopped moving. I said the market moved between support and resistance. So if the market has not formed 2 candles to the left, 2 candles to the right, that market has not formed a resistance. So it means the market will still continue to go until it forms a resistance. When it forms that resistance, your first trend line is you pick this first low, drag it to this second low, and stop. So when you stop there, you're not going to start waiting for this market from this D to now come down to where the trend line is. When it gets to where the trend line is, you start looking for a possibility of a candlestick formation showing up. When a candlestick formation shows up around the trend line, look to your left. If it's lining up with a previous resistance or a previous support zone, then you have a trade in your hand. When you put that trade, every trade you take, when this place was A, your stop loss must be below the A. When this place becomes your new A, your new stop loss must be below the A. Now, there's an assertion by Market Traders Institute that says that if the market does not take out the A, the market has no choice than to go your way. This is an expression of facts. Okay, it's an expression of fact. Several times the market will come down like this, attempting to look to create a C, but because the market was unable to see anything that will stop it from creating C to create C, the market comes down all the way until it takes out the A. So you see the beauty of this thing is that you are able to avoid entering the wrong trade, okay? Because you are waiting to see a candlestick formation that you can describe as your C, okay? All right. So the next thing we talked about Fibonacci. Okay, sorry, I'm not done with this trend line. Okay, so I need to jump. Okay, right. So I said you are going to connect your A, this is your A to your C. So in drawing the trend line, oh, so in drawing the trend line, what you do, you pick your A, connect it to this C. Now, when you connect this A to this C, you are connecting this A to this C because maybe I need to pop this thing out. I hope you are okay. Let me make it full screen so that you can see it very well. Let me take it away. Okay. All right. So look at my mouse. From this low here, you connect this low to this. I can't hear you very well. If you can hear me, Mr. Austin, you are saying something. I didn't get what you're trying to say.
One question on this timeline, if you can hear me.
Go ahead.
Yeah, is it better to draw from the body of the candle or from the wick?
Okay, so in my class, I did say that there are two ways you can draw the trend line. It's either you draw it from the body or you draw it from the wick. But I gave you the reason why you should draw it from the body. I said that the wick can be manipulated by every broker. The wick is not the wick is not a true representation of that low that we are talking about. But the body is. The body is a better place to draw it. Can you listen to, can you mute yourself so that just listening to me? When you want to talk, you cannot unmute. Okay, thank you.
Believe,
I'm in the class, please.
believe.
Yourself.
Okay, so let me take that again. So I said in my previous class, in my previous explanation, I did explain that the wick of the candle is subjected to broker's manipulation. Okay, if you get that. That the wick of the candle is subjected to broker's manipulation. So the wick is not a very effective place to draw from. Okay, it's not like it's bad. The wick is okay. You can draw from the wick. It's okay. But I'm telling you that because the brokers can manipulate it, it is better to draw from the body. And don't worry, in the course of this class, I'm still going to come back to this wick and body when I delve into the chart so that you will see it clearly. You understand it better then. Okay. So, but I mean, for the purpose of the knowledge, understand that you are drawing low to low. Okay. Low to low. So you are drawing from a low to a higher low. Okay. So you draw, when you draw A to C, you will now wait. By the time you are drawing this A to this C here, okay, this market, this D, has not gotten to this point. You are going to wait after the drawing, after you have drawn this line, you drawn this point A to this point C, you are not going to wait for the market to come down to the line that you have drawn. Okay? When the market comes down to the line that you have drawn, when the market comes down to the line that you have drawn, then you start looking for a candlestick formation. A candlestick formation will help you, will tell you that, oh, this market is becoming down and this time is going to change direction. Why? I said the candlestick formation, they are the U-turn in the market. Okay, and there are three types of trend line: the long-term trend line, the outer trend line, and then the inner trend line. And all this trend line you see, what they help us to do is to determine the speed of the market, even though if this market is going to follow this long-term trend line, it's still going to get to this point, but it's going to take a longer time for it to get there. But when the market veered off and start forming inner trend line, it means the market want to achieve its goal, faster, as compared to if it's going to follow either the outer trend line or the long-term trend line. Okay, so that's it for trend line. And we said if the market, for the market to change direction, if the market was in a downtrend, the market will what? Break the downtrend line. If the market was in an uptrend, the market will break the uptrend line. Okay, I'm sure we have a very detailed explanation of this in our former class. All right, then the next we talked about Fibonacci's, and we did say that Fibonacci was invented or introduced by a man named the Pisa de Fibonacci, Leonardo de Pisa de Fibonacci, that wrote the book that is called the Book of Calculation, and he introduced the Arabic numbers to the Romans, replacing the Roman numerals. This guy, he created a series or a sequence of numbers. And then mathematician over time tends to find out that there are unique relationships between these numbers. And when we check the practicality of these numbers to, nature or natural events, we find a very strong coincidence or a very strong relationship between the numbers and the normal natural phenomenon. And based on that, we said, if this thing can work for natural phenomena like this, then it's going to work in the forex market. And that's what brought about the introduction of Fibonacci into the trading platforms that we have today. All the trading platforms today globally, they have Fibonacci. And Fibonacci help you to determine your entry, your stop loss, and your exit more accurately than any other tool you could ever find in this world. The most accurate tool that will give you your entry, your stop loss, and your exit is Fibonacci tool. Go and ask any bank, any financial institution, they all trade the forex market. First Bank, GTB, FCMB, Bank of America, Barclays Bank. The only thing they do is to trade in the forex market. All the money you give to them to keep, they use to trade in the forex market. Don't deceive yourself. Okay? They give you peanut as interest after you have left your account untouched for 30 days. And they are giving you interest, 9%, 10% per annum, not even per month. But they are using those money to do a lot of mega financial business. Okay? And they are the ones that trade the forex market. Okay? So this Fibonacci is the same tool they all use. And this tool has different They have different grades. You know, the one that is available to you is the one that your let me say for now, your capacity, you know, can allow you to get access to. When you have like $5 million and you want to trade in this forex market, you go and you're not going to be trading with this computer that I'm using. What you will do, you're going to pay for Amazon Web Service, AWS, so that your trade will never cut. There won't be any reason that you say, oh, internet fluctuates, and because of that, that was why your entry was missed. People that trade megally in this forex market, that's what they do. They pay for virtual private network. They pay for AWS. You know, they pay for expensive servers. That's to tell you the kind of money that is in this market. Okay, and this is the tools that they use. Okay, so the coincidence of Fibonacci to natural event is just too much, that we so much believe that when we use it in the forex market, it will produce accurate result. And honestly, it did produce accurate result. And one of these results is this: when the market pulls back to the red, when the market wants to extend, it will go to the red. If it pulls back to the blue, if you want to extend, it goes to the blue. And if it pulls back to the green, when it's extending, it goes also to the green. Now, these levels that you are seeing, they are natural occurring support and resistance level that are not naked or that are not visible to the naked eye. They are not visible to the naked human eye. You don't see them. But if you know how to use Fibonacci, you'll be able to tell that this is 61.8 level. Okay, because this is 61.8 level, it means I have an hidden support level there. So when I see a candlestick formation on 61.8 level, I'm sure that when I'm taking that trade, it's going to rally all the way to 161.8. So this is the beauty of Fibonacci. Okay. And then we talked about how we use it in an uptrend. How we use the Fibonacci retracement and extension tool in an uptrend, and also how we use it in a downtrend. The uptrend and the downtrend, they are just equal but opposite. Okay, so we said if the market is making higher highs, every of this pullback, you see between this higher high and this higher low, there's a Fibonacci level here. There's a Fibonacci level here. There's a Fibonacci level here. If this Fibonacci level is 61.8, this market will move all the way to 161.8, and then it will give you a resistance. When your market gives you a resistance at 161.8, you know the market has gotten to your take profit. Automatically, if you have set that as your take profit when you're entering the trade, the system will automatically close for you to take your profits. Okay, so in an uptrend, I mean, it's simple. You just look for the levels where so take for instance, this is your Fibonacci, this is your A, this is your B, and then the market starts coming back to your C, and look at this area. This is the 50% level, right? Now, from this 50% level, we say the market is going to buy. Okay, why? Because the market is going to give us a candlestick formation. Now, where is the candlestick formation the market gave to us in this instance? Is this bearish candle? Okay, is this bearish candle that came down, and then this bullish candle? This bullish candle closes above 50% of the previous bearish candle, and this candlestick is described as piercing line candlestick formation. Okay, now based on this piercing line candlestick formation, you are going to put your stop loss below the A, then you put your take profit at 161.8, and you see the market. By the time the market moves, see it got there and then hit your take profit. Okay, so that's how the Fibonacci tool work. We'll look more into it when we start doing the examples. Then we talked about how the larger time frame controls the smaller time frame. Says the larger time frame control price movement in the smaller time frame. And I did show you how the market formed by starting with ABC, and then the market start trending up. And when it's trending up, for the market to trend down, the market will first of all break the trend line, okay, that goes up. So this is a trend line that goes up by connecting your A to C, A to C, A to C. The market breaks this trend line. Then the market pulls back to behind the trend line and form what a C. Now, for your information, it is also possible that after breaking this trend line, the market did not close below this A. If the market breaks this trend line but did not take out the A, there's a 50-50 chance that the market will still go back up all the way. But one thing that will stand out, that will make the market to change direction, is when the market breaks the trend line. I told you, if the market breaks the trend line, this market that is bullish is no longer 100% bullish. It is now 50% bullish, 50% bearish. And then when the market takes out the A, it becomes 80%, it becomes 20% bullish, 80% bearish. And then when you form the C and you draw another trend line, okay, this trend line, and you see that the market is now staying below this trend line, it is now what? 100% bearish. That's how the market changes direction, okay? And you'll see it crystal clear on the chart. If you look at the chart very well, you will see it, because where it becomes a problem is now that I'm talking about it using lines, is sweet. But when it gets to the charts, people start getting confused. And look at these two crowns. Look at this shape here and this shape here. When the market is going up like this and breaks this trend line and then form this, watch this. If you join this place and this place together, if I draw a line across here and here, you will see the shape of this crown. That is, a bearish crown is an A, B, C, D price movement to the upside, followed by an A, B, C, D price movement to the downside. If you join these 2 points together, you have a crown. You have a left tip, a center tip, and a right tip, and then the market goes down. In the same vein, if you have A, B, C, D to the downside, followed by A, B, C, D to the upside, you join these two together, you have a crown. You have a left tip, a center tip, a right tip, and then rally. Okay, so that's how the market changes direction. So, and I said, as the market does that to change direction, when the market is moving, it moves A, B, C, D in all the time frames. So this time frame I say is the monthly time frame, and then the market goes to the weekly time frame. It's still doing A, B, C, D on top of the monthly time frame. Then the daily time frame does its own A, B, C, D on top of the weekly time frame. And lastly, the 2 hour or the 1 hour does its own A, B, C, D on top of the daily time frame. Now, how do you know that this is when you should enter the trade? You want to enter the trade when all the time frames are moving in the same direction. So if I say this is the monthly time frame, the black going up, I want to see the weekly going up, I want to see the daily going up, and I want to see the 2 hours or the 1 hour going up in order for me to enter the trade. So when I see that all of them are going up in the same direction, that is my best time to enter, the trade to that direction. Okay. So, and this is how the larger time frame. So you can see that the monthly is acting as a trend line to the weekly is acting as a trend line to the daily, and the daily is acting as a trend line to the hourly. And next, we talked about indicators. We said you can trade this market without indicators, but a more logical thing to do is to look for some means of confirmation that will make you, that will tends to give you some better level of confidence in order for you to stay on that trade. And that's where indicators come in. And we said we have leading and lagging indicators. Leading indicators are indicators that tells you where the market is going to go, while lagging indicators are indicators that tells you where the market has been. Okay, so lagging indicators, they tend to put you in the trade, very late. But even though they put you very late, remember this. Hello? Someone want to ask a question?
No, you can go ahead, sir.
Okay, let me. All right. So they are more like a tool that you use to confirm whether your entry is okay or not, or how long you want to stay on that trade. The indicators will help you to determine that. And there are a whole lot of indicators we talked about. We talked of several types of these indicators, and I'll just read through. All right, so we talked about some key type like the stochastic. We talked of stochastic, and then we talked about how we can apply stochastic, to help us in the 1, 2, 3 trading strategy. And our 1, 2, 3 trading strategy is when we say that the market will create a candlestick formation, breaks an aggressive trend line, and then the stochastic is coming from either the buy or the sell zone. Okay, so each of these break you are seeing is a trade entry, trade entry, trade entry. Each of the, and when you see where the trade entry is coming from, you see that this line is crossing above the 20. This one is crossing above the 20. This one is crossing above the 20. This one is crossing above the 20. Okay. The same vein, if the market is coming down, you can use this indicator also as a tool to help direct your entry. And then we talked about the smart gauge. The smart gauge is an indicator that is not available to all platforms. It's available on the smarttrader.com. It's a website, just like your trading view. You go there, and it's not a free indicator. You purchase it. But the why I brought it for you to see is a way for you to determine if all this, you see all this indication, if this indication on a daily is telling you that the market is buying, on the 8 hour is telling you the market is buying, on the 4 hour is telling you the market is buying, and on the 1 hour is telling you the market is buying, you will agree with me that that's a replica of what we just talked about, how the larger time frame controls price movement, on the smaller time frame. Okay, so you want to see everything line up in the same direction, and then you look for a trade entry. Okay. So we also talk about the second model for indicators. We talked about some key indicators that you also know. Some of them are the momentum. We talk about momentum. We talk about stochastic. We talk about the average directional index, the ADS. There are so many of them. Okay, but then we just selected some few of them to talk about, and then we did some examples. Okay, this was a case of momentum. Okay, I would say when momentum is above this 100, so there's a line, there's a mid-level line, 100. If momentum is above the 100, the market is buying, and if momentum is below the 100, the market is selling. Okay, we talked about that. Then we talked about MACD, similar to momentum. We said if the MACD histogram are above the 0 level, the market is buying, and if the MACD histogram are below the 0 level, the market is selling. But there's one feature of the MACD where the signal gets separated from the histogram. So if you are able to catch where the signal separates from the histogram early enough, you will be able to take the market earlier than the person that is waiting for the histogram to cross to the downside. And secondly, we also talked about how MACD acts as a divergence tool. We can use all the leading indicators as divergence tool. When we say divergence, we say when the market, you see in this case, the market price made a higher high, but on the MACD, price made a lower high. You see that? So if the MACD is saying that, oh, the market is going to go down, but the market itself is telling you that market is going to go up, this is a deception in the market. In reality, this market is actually going to go down, following what the indicator is telling you, because the indicator is a leading indicator. Okay. So that's when we talk about divergence.
So in this case, we will now follow the indicator and not the chart.
Very correct. Very correct.
Okay.
So,
Then can you give example of lagging and leading, please?
okay, so an example of this is leading. This one that we were just talking about, this MACD, is a leading indicator. A lagging indicator is your moving average. Let me see. Yes, this is moving average. So moving average is lagging. Lagging, why? Because you are actually calculating, you are calculating behind. When you say a moving average is exponential 10 or simple 10 or exponential 50 or simple 50, depending on the chart you're applying it to, depending on the time frame you're applying it to. If you're applying it to say daily, it means you are taking the price information for the past 50 days to determine what the market is going to do next. Okay? But if you are applying it to a 4-hour chart or say a 1-hour chart, if you are applying 50 MA to 1-hour chart, if you are talking about 50 hours behind, what did the market do in the last 50 hours? That you'll be able to use to predict what the market will going to do next. But the simple way to trade moving average is to trade the retest. That is, when the market breaks above the moving average, then the market comes back and tests the moving average. When the market tests the moving average without breaking through the moving average, you have a trade. But if the market comes back to the moving average and breaks below the moving average, then you need to wait to see a test in the down direction, and then you will now have a trade. So if you as a trader just set an indicator and say, okay, I only want to enter this trade. Let me just put one moving average here. I only want to enter this trade every time the market breaks below the 50 moving average. You put the line like this, okay? Now, you are not considering any other thing. Your own is when the market breaks the moving average. This is a case of where the market breaks the moving average. You enter the market here. Now, when you enter the market here, one moment, please. Okay. When you enter the market here, you will see that the market will attempt to favor you first. Okay. And then later comes against you. You see that? Now, the market comes against you. Of course, later the market decides to favor you. But now, it's not everybody that will see this kind of pullback and are able to stay in the market. But if, let's assume that you have a lot of equity, you take the trade here and you're able to put your stop loss below the low, because your stop loss need to go below the low, right? Even though this market does this pullback. Now, if this market is doing this pullback and you are not looking at the chart, now there's a tendency that you are not there and all these things happen and this market goes in your favor. You are a superstar, okay? But the real way to trade moving average is allow this market to break. When it break, allow it to come and test. Are you seeing the test here? Now, when the market hits this moving average and give you this doge, are you seeing this doji star, this candlestick? This is your perfect entry. This is a single candlestick pattern that can push the market up. And then you take the trade from here and you allow the market to run. Now, another thing you can also consider is when the market hits this level. This level, what is this level in history? You look to your left. This level that the market hit now, what has happened there before? Has it been a support before? Has it been a resistance before? These are things that can help you determine if the place you are taking the trade from is strong enough, by principle, for you to actually take the trade from there. Okay, so this is just a simple demonstration of how the moving average. And remember, this is 50. 50 is one of the most used moving average. The two most used moving average are 50 and 200. Okay, then every other moving average you can use. And now there's no one that you say this one is better than this one or this one is the best. So it all depends on you as a trader, what you want. So if you choose to use 50, fine. Create a strategy around 50. If you choose to use 20, beautiful. Create a strategy around 20. Okay, I think I mentioned to you in the course of this class the riding the trend strategy, which is made of 50 exponential moving average and 10 exponential moving average. So if I add 50 and then I come and add 10, this time make the 10 maybe blue. Okay, and maybe a little bit thinner. And then I say 10. So now I have 50 and I have 10. The riding the trend strategy says, if this blue, watch this, when this blue breaks above the gold, okay, the blue breaks above the gold, irrespective of the fact that the candlestick goes even below the gold, but this blue did not break below the gold, this market is still in an uptrend. The market will only change direction when moving average 10 comes below moving average 20. Can you see that? It's a lagging indicator, but you have created a strategy around it. And my strategy says the market breaks the candlestick breaks the moving average, the blue moving average crosses above the gold moving average, and then the market comes back to test. Are you seeing this test? When the market did this test, moving average 10 did not break below moving average 20. So my best entry for this market is this bullish engulfing candle right here. If you buy this market here, your first time you will consider leaving this market is here when this market breaks. When this market breaks, are you seeing when this blue breaks below this gold? That's the first time you will consider leaving the market. And you know how many people you would have made then? If you start from here and run all the way to this place, that is 396 pips. You see that? 396 pips in about 71 days. That's like 2 months plus. That's a lot of money for just placing the trade and going to sleep without doing nothing. Now, if remember, we talked about Fibonacci. At this point now, I'm not applying Fibonacci as my exit strategy. My exit strategy is any day this blue breaks below the gold. You want to see it in history? Go back in history and see. Watch this market cross, attempt to cross here, this succeed, it continues. It came here, test, it continues. In fact, every time you see that the market has come to test, get into the market on the next candlestick formation. The market came here to test, get into the market on this candlestick. The market came back here, came here to test, get into the market on this next move. Okay, and you'll be in the profit. And sometimes this can take a very long time, you know, can take a very long time. Sometimes the market can be so scattered, but the moving average will guide you, to keep you in the market. It's just like what is happening here. Now look at this one, USD CHF. This market is pulling back, right? Pulling back with a buy. Now, if this market successfully go and breaks above this gold, and then you see that this blue crosses above the gold, condition number 1 met. Condition number 2, allow the market to pull back to where the gold is. When the market pulls back to where the gold is, and you see that the blue did not cross below the gold, look for the next candlestick pattern that will show up in that place. Take the trade and leave your trade until any day the blue breaks above or crosses below the gold. That would be your exit. Talk to me. Does it make sense?
But yeah, it does. But it's dangerous in that it means that you have to be following the trade. So it's better to just use Fibonacci and get whatever you want to get and go and sleep.
Yeah, so remember, this is just one strategy. There are there are plenty strategies that people have developed in the past. Okay, so you see this strategy, somebody can decide to take this trade using divergence. Okay, you just come here, let me look for MACD or stochastic, anyone. Let's say MACD for instance. This is the original MACD. Okay, this is the way it comes with the indicator. All right. So now when you're looking at this MACD, now you want to tell if the market is diverging or not. How do you know the market is diverging? I said when the MACD does something different from the candlestick, you say the market is diverging, right? So if you look at, and every time the market, changes direction, the market will create a divergence. So let's look at this one. The market creates a low here. And then it came and creates a low here. You see that? So the market creates a low here, and the market creates a low here. Agreed? Now, this low corresponds to this low. This low corresponds to this low. So now let's see what the market creates on the MACD. So this low corresponds to this low. So on the MACD, did it create lower low?
Yes.
No. Look at it. The MACD, is it sloping to the downside or sloping to the upside?
Upside,
The candle,
lower high,
the
higher
candlestick,
low also.
excellent. The candlestick, is it sloping to the downside? Yes.
Yes.
Okay. So because the candlestick is sloping to the downside, but the MACD is actually sloping to the upside, it tells you the market is going to change direction.
Divergence.
The market has diverged. Divergence is the most accurate way to enter the market with a very small stop loss. If you are buying, if you are buying this market, if you are buying this market from this place, maybe your stop loss will just be here. Very tiny stop loss. Let's assume that you buy the market from any of this candle here, I just want to make sure that two candles to the left, two candles to the right has formed. Then you buy the market. You see that your stop loss will be very small compared to moving average, where you have to wait for the market to break through the moving average. The market come and test the moving average, and then you see a candlestick formation, you buy. See your stop loss here. Your stop loss is from year to year. Why your stop loss in this case is from year to year? You see the difference? If you know how to use divergence very well, you will be in the market from the very first wave. You will enter the market. There are people that are called divergence trader. They don't trade any other thing in the market, only divergence. If they don't see the divergence, they will not trade. They must wait to see divergence. While some other people will wait for the market to finish diverging, and then they trade what we call the continuation after the divergence. In reality, trading continuation is actually a best trade you can make. Because if you try to trade divergence is also a reversal. And the chances that, oh, this is the last low before the market will reverse is very, very slim most times. Usually it's very slim. Okay. But a lot of time you also have some good ones that will put you into profit. Okay. So is the concept of divergence, did we all understand it? Let me get some chorus answer. Let me be sure.
Yep.
Yes, yes, yes.
Yes.
Yep.
All right, fine, thank you. So
So
that's
the divergence
Yes.
indicator, where can we, is it free or we have to buy it?
no, so okay. Wait, let me make it easy for you guys. I think
Divergence is not an indicator.
no, it's not an indicator. Let me just show you. Let me make it easy. So you come to baby peeps, baby peeps. I just want to take you straight to divergence because there's a way baby peeps did their explanation and I love it. Divergence. All right, so this is divergence on baby peeps. So let's see regular eating. So there are two types of divergence, regular divergence and easy divergence. So let me just take it from here. This is what I want you to see. Yeah. Okay, you say I just want you to look at this. Trading divergence. You say, what if there is a low risk way to sell near the top or buy near the bottom of a trend? Okay, back to this chart. We say we want to show you a low risk way where you can sell this market from this top here and you can buy this market from this bottom here. Okay, and you will not have to bother because you are not risking too much. I don't know if you get me. See this low. This is a low that corresponds to this low. This is also a low that corresponds to this low. Can you see that the market did not diverge here? There's no divergence here because this market creates a low and goes to lower low. The indicator creates a low and also goes to a lower low. But look at this low and this low. The market creates a low and went to a lower low, but the indicator creates a low and went to create a higher low. This is divergence. So if you come here, you say if you were already in a long position and you could know ahead of time the perfect place to exit instead of watching your unrealized gains, okay, that is your potential profit or your potential Aston Martin. I like the way they put it here. Okay, vanish before your very eyes. Your trade reverses direction, right? What if you believe a currency pair will continue to fall but would like to short at a better price or a less risk entry? Guess what? There's a way to do it, and it is called divergence trading. In a nutshell, divergence can be seen by comparing price action and the movement of an indicator. That indicator is always a leading indicator. It could be stochastic, it could be MACD, it could be RSI. Any of these leading indicators can do it for you. No particular one. Okay. Okay, look, it's even here. You can use RSI, you can use MACD, you can use stochastic, you can use CCI. Any of this indicator can do it for you. Okay. What's the indicator going to do for you? Okay, let me pull back to where we came from. Regular divergence. CCI is commodity channel index.
Okay.
So this is it. This is your price. This is your indicator. Your price makes a lower low. Your indicator makes a higher low. This is called regular divergence. Okay. And then your price makes a higher high. your indicator makes a lower high, this is regular divergence. So when your price makes higher high and your indicator makes lower high, sell the market at this top. You would already know. And now let me also buttress it to you. As you would have already know. The market has already made this high. The market has already made this high. And then you see the candlestick, that this candlestick is going up, but you see that this guy is not going up. And then as this candlestick is going up, while this guy is not going up, the next thing you see a candlestick formation. From that candlestick formation, you get your reversal. I don't know if you understand. Look at me. Look at this.
Yeah.
This is your first low, and the market is coming to this low, right? But as this market is coming to this low, look at the indicator. Indicator is not going below this low of this indicator.
Yeah.
And then you see a bullish engulfing candlestick here. This is your reversal.
Yes.
Immediately enter the trade here. Put your stop loss below this low. And you will ride this market from the beginning to the top.
Yeah.
Divergence is the only tool that can do it for you in the forex market. This is for regular divergence. Then
So how do we put up the divergence on our chart? That's what I was asking.
that's what I'm explaining,
That
Joshua.
is what he's saying.
Look at it. Look at your chart now. This is your chart. This is your candlestick, and this is your indicator. Look at this place.
How do we call it up? How do we call this up? This thing under, how do we add it to our chart? I understand what you're explaining.
Let me remove it. I've removed it. Right? For you to add it, go to your MetaTrader 4, click on Navigator. Come to Indicators. Under Indicators, look for Oscillators.
Okay,
Under Oscillators, select MACD, or select Momentum, or select Commodity Channel Index, or select any of these indicators here can do it. Relative Vigor Index, Relative Strength Index. But I choose to use MACD, and I say Apply.
Okay.
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 So,
Thank you.
So if that is clear, I will just backtrack one moment, and then we'll look at the hidden. So we have looked at regular, and now we are looking at hidden. Okay, so you click on hidden divergence, and I want you to see the difference between hidden divergence and regular divergence. Regular divergence is when the market makes a higher high, and the indicator makes what? A lower high. Okay. Now, in the case of hidden divergence is different. So hidden divergence, price makes a higher low. Can you see that? Higher low. But the indicator makes a lower low. This is called hidden bullish divergence. But if price makes a lower high and then indicator makes a higher high, this is hidden bearish divergence.
Okay.
See, it sometimes, well, I don't even know how to put this. I'm sure that you saw me open baby pips and brought this out. I'm not giving you this in a slide. I did not put this in a slide for you. This is available to you in the public space. Everything you need to trade this market is available to you for free in the public domain. The problem with most people that are struggling to get forex knowledge is that they believe that that teacher that is teaching them is the only person that can do it right.
Yes.
And it's very wrong.
Yes.
You need to get out of that space.
Yes.
Okay? Don't be, pull the trigger. Don't be scared. If you lose money, see,
Yeah,
you
100%
cannot make
correct.
money without losing money. If you lose money, that's not the end of the road. See, when I started trading, there was something I did. When I lose money, I don't waste more than 30 minutes to fund again. I'm sure my broker, they would have seen my trend and say, who is this desperate guy? You know, that tells you that I'm not scared of losing the money.
Yeah.
I first of all try to kill that fear. First of all, try to kill it. I know people that lost only once, and since 2018 till today, they've not opened chat again. Once, only one loss. I know people
Me.
that have tried, you know,
I'm an example.
I did it the first time, I did it the second time, I did it the third time. Oh, it's not going to work. They close their chat. They will not go visit the Forex chat again. I know people like that. You understand? So each and every one of us will have different, risk appetite and ability to manage stress. So the biggest problem, like I said, most people, they think that it's only when that their teacher does it that it will be correct. Remember, that teacher will not be with you forever. And one of the major reasons why I'm doing this class and I'm doing it for free is that, this same class, I've taught a lot of people and they paid. They pay money for it. I didn't do it for free. But I thought to myself that if I do it for free, I will reach out to more people. And let's assume that for this class that we have done, sometimes we get up. I know when we started, we had like 40-something people, 50-something people, sometimes 30, sometimes 20. Let's say just 10% of this number becomes successful trader tomorrow. That is school fees solved for some families. They will never have to bother about how to pay school fees again. In this group that we have, I know some persons because some people has also contacted me privately. Somebody has grown his account from $44 to more than $100 in this class as we are speaking now. He has never done Forex before, never in his life. This is the first time he's doing Forex. He's among us here. So it tells you that you need to be able to do it yourself. The whole essence of doing this thing is making you have that confidence to do it yourself. Okay, let me show my face because I'm sure some people have not seen my face. Some people have attended this class plenty times, and I'm sure they've not seen my face before. So let me see. Let me turn on my where's that my face?
Nice one.
Where's that my small face?
We have seen the face of the gold.
Your handsome face.
Have you seen my face now?
Gold.
Handsome face.
Okay. So that's my face. In case you are wondering who is this guy that's been talking to us for months and we have not seen his face. Okay. So this is my face. This is the face of Mr. Patrick. All right, thanks. Okay, so let's try to believe that we can do it. Okay? Believe that you can do it. Because if you don't believe that you can do it, it's going to be even more difficult.
Yes.
Do you understand? It's going to be even more difficult. Yes. So let's see if we will see a hidden divergence. Okay, let's look for a hidden divergence.
Excuse me, sir.
Yeah.
Last week, Sunday, there is something you were taking us on. I can't really remember. But I think
what was that?
Was a very, very important thing that you were trying to do, but the network didn't permit.
Okay, the network disturbed us. Yes, don't worry, I'm coming. We'll come back to it. I just want to finish this recap.
Remember, it will be good.
No, don't worry. I'll remember. I'll come back. I'll come back. Don't worry. That's the essence of this class. I just want to take this recap, and then I'll come back to it. We've done like 1 hour plus, so let's see. I'm almost done with the recap. Okay, it's just because of this divergence explanation I needed to go details. Okay. So and there are several other concepts in forex trading that we need to know. Okay, as traders, we need to just 1 minute. That's my Okay, I need to really know it. All right. I hope you can see my screen.
Yes, we can see.
Okay. Okay, so let's just see this. So that's for indicators. There are a whole lot of indicators, that you can deal with. Then, okay, I didn't do this. Then I talk about the 7 irrefutable keys of how you can execute a successful trade. Sorry. 7 irrefutable keys of how you can execute a successful trade. And we listed the 7 keys to mean this following. We said we need to know where the Monday, the weekly, and daily charts are in compatible trading zone. And we talked about the trading zone. I've explained the trading zone, several times. We talked about how we can figure out if we're entering the market in a retracement mode, and also if the daily trading chart and the stochastic are line up and are moving in the same direction. We talk about making a projected decision, whether it's a trading day or a trending day, and also if we're entering the market at the active or the dead zone. And I said for us in Nigeria, it's easy for you to know because the United States time, the United Kingdom time and our time is really close. So when business are closing up in the United Kingdom, the market is moving from active zone to the dead zone. And we'll say, look at the projected daily trading range of that currency pair, if there's any PPC left for that day, or else you will be entering the market when the market is just about to, finish the exhausting its peak for that day. Then so review your checklist and be confident that you can take your trade. So these points, we explain them one after the other. There are lots.
Yes, sir. Which one is dead zone?
A dead zone, you don't even need, okay, so every day, let me show you the dead zone every day. I will use one indicator to show you the dead zone. Okay, so let me bring this one up. So the dead zone is from when the market, when the UK market close. From when the UK market close, the market has entered the dead zone. It's only the US that try to make it a little bit active, all the way to around 10, around 10 p.m. our time. Okay. Why is this thing disturbing me? I want to, how do I minimize it like this? Okay. All right. Okay. So let me show you how you know the dead zone. So this is the dead zone. When you see the market like this, okay, you see something like this. This is active when you see big candles like this. But then there's an indicator that will show you the dead zone. Okay, Control N.
We're not seeing you. You need to share your screen, Prof.
Okay, 1 minute. Let me see. Screen share. Confirm if you can. Confirm if you can see it.
I can see it's on.
I can't see.
Maybe it's your network.
Check your network or maybe refresh.
Refresh, yeah.
So I'll put one indicator on this chart and I will explain that indicator for you. Okay, so this indicator kind of help you to know when the market is in the dead zone. So I'll put the date separator now. Okay, can you see the date separator? The broken vertical line. Are you seeing it? Okay.
Yes.
So now that broken vertical line is the beginning and the end of every day. Okay, so this is 1 hour chart. So this is from this broken line to the next broken line is 24 hours. Okay. Now, when the market enters the dead zone, look at the dead zone. The whole of this stretch from here to this place is the dead zone. Look at it, year to year. Now, the next day, the market will break out to one direction. Look at this one. Look at this. Which day is this? This is 2nd of August. 2nd of August, look at it. This is your dead zone. and the next day the market breaks out to this direction. And this is a really, really active zone. Okay. And then came to the dead zone again.
Sorry.
Okay.
Hello, sir.
Yes.
Please, what indicator are you using to mark the dead zone?
The name of the indicator is called London Forex Rush. Now, the reason
London Forex Rush.
yes, the reason why we, like I said, the dead zone actually starts from when the UK market closes. Okay, and that is around 5 p.m. Nigeria time.
5, yes.
Yes, if you look at by 8 o'clock in the morning to around 2, the United States is going to kick in. Now, when United States kick in, you get to be seeing more volatilities in the market. Okay, but by that 5, you see that all those high volatility movement, you see that they have died down.
Yes.
And now your candle will start shrinking.
Okay.
Now, when the day ends, even though the dead zone don't really actually start from here, what this thing does for you is that between when the day ends and 8 a.m. the next day, which is when the London market is going to, when people are start opening office in the UK, this indicator will draw this line for you. And once it's that 8 a.m., trust me, you will see either the market will break to one side of this line. Now because it will identify the highest and the lowest point between midnight and that 8 a.m. of the next day. That's what this indicator does. So we identify it for you. Then your work is to now see the next day what's going to happen. Which side is market going to break out to? See like this day. It just break out to this side and it went.
But
if the market is okay, see like this day. Look at this one. The market break out to this side. I want you to particularly, let me put a line. Let me put a long line to do it for you. So you draw a long line here and draw a long line here. Okay. And say this market will either break out to the upside or break out to the downside. Now look at all this. This is Aiki. Even though this market is coming, the wick is higher than the line. Can you see that they didn't close above the line? This is the first one that closes above the line. So the first one that closes above the line, that is your most accurate entry.
Okay.
If you had just bought this market here, that this candle closes above this line, you would have been in all this profit going up. In the same way, look at this day too. The same way, look at this day. This one is bad in the sense that the market attempt to want to take you out and then come back. So if you have said maybe you're aggressive and you have put a trade, this market would have taken you out, taken you in, taken you out. Okay. But now if you look at look at this Aiki very well. If this Aiki does not break out of this range, you don't have a trade. Stay where you are. You don't have a trade.
I want to ask a question, sir.
Yes.
You spoke about London and US market. What about Japanese?
And so because you are in Nigeria, let me explain it to you. Nigeria. In Nigeria, like today now, in the next 30 minutes or 40 minutes, this market is going to open.
It will open, yes.
Right? Now, remember, this market is opening because I'm using this broker. I also have another broker that will not open until 1 o'clock the same night. Do you understand? This broker, the Reef will not open until 1 a.m. That's when the market will open. But they are all the same market. It's the same GBP USD. It's the same Euro USD. So why is it that it's open on one broker and it's not open on another broker?
Mm.
Do you understand? So this guy, the market will not open until 1 a.m. So if you even if you come here, if you click on your market watch, for instance, and then you come and apply time. When you click on the market watch, apply time. So let's see the, let me see if I can arrange it. Okay, yeah. So you see, good. So look at these ones that are, where is that Euro USD I saw now? Okay, see all these ones. These ones are the standard, these are the standard
Currency pairs.
currency pair, right? Look at this time. See the time here. Now, this timing is a function of where this broker is located. Now, in our own Nigeria time, this time is 1 a.m. Nigeria time. So, but if even though this guy FSTM is going to open to me around 10, my derivative will not open until 1. The same thing with AvaTrade. This AvaTrade will not open until 1. That's why you will see, and that's why I also told you that the week is deceptive. You know, the only thing that is very, very valid is the body. The body is more accurate than the week. Okay, so this is AvaTrade. So let's see AvaTrade and see the timing. Can you see AvaTrade? Can you see the timing? Look at the time. It's going to open by 1. But FSTM is going to open around 10. Look at FSTM. FSTM is around 11. 23, yeah, say around 11.
How about the reef?
The reef is 1 a.m. tonight.
Okay.
So, but when the FSTM sends you your daily summary or report, is that not
Yeah,
when they close?
that is when they open.
Oh, really?
That is when a new daily candle opens.
Oh, I thought that's when they close finally. Because I normally get my report at about 10 o'clock, 10 p.m.
And so it depends on how you are looking at it. So the candle for that day that you have traded, that is when the candle closes. And simultaneously, that is when the candle for the next day open. So let's say you are on a Monday. That is when Monday candle close. If you are receiving the report 10 p.m. Monday, it means the candlestick of Monday has closed and the candlestick of Tuesday has opened.
Okay, that makes sense now. Okay.
Okay.
Thank you.
All right. So I think that's fine. So basically, everything we are doing is to be able to enable you to do it yourself. All right. So I think we've covered. So now I wanted to explain to you the application. So we are talking about applying the knowledge that we have gained. How do you use it? How is it beneficial to you? One is that you have known the knowledge, you have knowledge, you know it. But how do you use it? You're using it, you can use it in diverse ways. Okay. And I told you in my message today, that's how I'm going to show you my entry strategy. Okay, first I think I opened this thing before. All right. I tried to explain this to you the other time, and that network was misbehaving. Okay. I said one thing you will do as a trader is you will create your strategy. And I said what you are seeing on the screen now is my personal strategy. And if I don't explain it to you, you will not understand.
Never.
You will be confused. Do you understand? The more you look at it, the more confused you become. Okay. But now look at this chart.
The more you look, the less you see.
Excellent. Look at this chart. You see there are two indicators in this space. There's one indicator that is called precision trend, and there's another one that is called solar wind joy. And then on this window, there's an indicator that is called Forex signal.
Where?
Okay? On this window, this bottom window, this last window. Look at each of this line is a different window. This is one window, two window, 3, 4, 5, 6, right?
Right.
And then this where you have the candlestick is the main window. Okay. So this on these sub windows, I have indicators. On the main window, I also have indicator. So now the indicator that I have on the sub window, they try to corroborate the indicators on the main window. Okay, and you can only do something like this when you have tested it over time. When you do it, there's what we call strategy tester. I don't know how many of us, know how to use strategy tester. When you develop a strategy, you put it on the strategy tester and run it maybe for a period of maybe 1 month, 2 months, 3 months. It all depends on you. And you will see, like all this arrow that you are seeing now, if I put this thing on a strategy tester, you will see when the arrow comes out, you will see the exact time when the arrow comes out. And then you will see how well the market obeys the arrow after the arrow came out. Okay, so now I did explain to you that on this my strategy, I have what is called trend. When you are creating your strategy, the first thing you consider is trend. And in my explanation of indicators, I did mention to you that the volume indicators, they tend to have more strength in terms of trend determination. So this indicator and this indicator, this one that flips up and down, is a volume indicator. Okay, and when it flips down, it tells you the market wants to go down. So now I don't want to stress myself. First, I want to identify my trend. And what is my trend? My trend is when my black line is up and my candlestick are below the black line. When the black line is down and the candlestick are above the trend, the black line, it means the trend is up. If the candlestick are below the black line, it means the trend is down. That is condition number 1. Condition number 2, this is my volume indicator. So the trend is down, but the volume indicator is up. It tells me that the volume indicator is trading against the trend. And that we describe as what? Retracement. So when the volume indicator now flips in the direction of the trend, now the volume indicator is going back, is going back, is going back, and all of a sudden, boom, I get this arrow. When I get this arrow, I'm going to start getting ready to see that my indicator will flip down. And all of a sudden, this indicator flips down in the direction of the trend because my black line is up. When it flips down in the direction of the trend, now there is a place I will enter the trade and my drawdown will be 0. I'm sure some people will be surprised now. My drawdown will be 0. How am I going to determine that? Let me take you to candlestick and explain it. So if you come to your candlestick.
Hello, sir. Sorry to bother you.
Yeah.
Hello, sir. Sorry to interrupt you. On what time frame do you apply this strategy?
All time frame from monthly to 1 minute.
Okay, sir. Thank you.
You can use it on all the time frame. Okay, don't worry. I will also show you how I develop it for specific time frame. So yeah, let's just take a plain chart. Plain chart. All right. Now there's something spectacular that this market does that it is not written on any book. Okay, I'm going to show it to you now. It's not written on any book. How can I make it visible to you? Okay, let me see something. Let me change the scheme. So let's change the scheme to color on white. All right. All right. Is this one clearer? Can you see it better?
Very well.
Yeah.
Yes.
Better.
Okay.
Yeah.
All right. So I want to show you something that you have not heard before. Now, this market, you know, I told you that when the market formed two candles to the left and two candles to the right, there's a tendency that the market will form either a support or a resistance, right? I told you that.
Yes.
And now, when the market creates that support, you know, on the market, you are seeing plenty support, you are seeing plenty resistance. So if you remove the wick, let me remove the wick to do this explanation. Let me take away the bar up and the bar down. I'll say, let's leave only the candles. Are you seeing only the candle now?
Yes.
Okay. Now, remember, I told you that the real support and the real resistance is when you have a bullish candle that was immediately followed by a bearish candle. Remember? And when you have a bearish candle that was immediately followed by a bullish candle. I said when the market is trending, the market will be forming bullish candle that are closing higher than the opening of the previous candle, which is this place, bullish, 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 bullish. So you see that the market is in a slant order. But when this bearish came, this bearish, even though it didn't close below the opening of this candle, you see that this candle did not close above this candle. So that slant formation stopped when this bearish candle came on. At the formation of this bearish candle, this slant movement, if you look at the top, okay, look at it. If you look at the top of this candle, connect it to the top of this candle, 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 it's a slant shape. But now, if you want to connect it to this one, it's no longer, that slant is no longer there. Now, I'm saying that this place is your resistance. Even if you apply your wick, you will also know that that place is your resistance.
Yeah.
Right? Okay, good. So, now, well, for you to enter this market without a drawdown, there are several ways you can do it, but the most remarkable of them all is when the market forms a bullish candle. Let me take this one to explain. I want to explain it to you with this place. It's your duty to go and look for, the most accurate ones, the one that you think you can deal with. Okay? This market, you see this market came down, boom, close. And then immediately there was a bullish candle close, right? Mark this candle. Mark this candle, okay? And mark the back of this bearish candle. Did you see that? Your entry into this trade is the back of this bearish candle. Sell. If you want to sell this market, your entry is the back of this bearish candle. Now, don't be confused. This bearish candle and this bullish candle, they constitute what I call a range candle. Okay? What I call range candle. Now, this bearish candle and this bullish candle, they took out the last low. Look at the last low. This is the last low. When the market created this low, it went up. And then the market now came down, 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 and then break this last low. When any of the candles that break that last low, okay, it's possible that it's not this one. It's possible that, okay, when it breaks this candle, this was not the candle that gave you bearish and bullish. It's just like in this case now. Okay, watch this one, like this case now. This candle now. This is the last low here. Okay, this is the last low here. And this one now came and break this one. Okay, when this one break this candle, when this one break this low, this market is going to fall. But the fall is going to come from the back of this candle, behind this candle. Okay, in this instance, the market attempt to break it, which is what we sometimes call fake out, and then immediately it created a bearish engulfing candle. You put another sell here. Now, me, because I want to be aggressive, I put the sell here even before the market gets there. So as the market is hitting this place, if I put the wick now, if I put the wick back now, let's just use black as the wick, separate up and back down. If I put the wick back now, you will see that the wick gets very close. In this instance, you may miss it. Okay, you may miss it if my sole entry is actually the back of this candle. This thing came close to my entry, but it didn't trigger. So what I do is this. I will apply. Let me see. Do I have it here? Which currency pair is this? USD CHF. Okay, let's deal with it here. USD CHF. Okay, let's deal with it here. Fantastic. So let me first of all put the standard candle for you. Okay, so that you don't get confused. Then I'll now bring the Fibonacci there. So this is what we are talking about now. This is what we have been looking at on the other chart. So this is the candle that I say I will use the back. Okay, but now this same candle, I can apply this guy, right? So let's zoom it up. This is the candle. Using it, this is the candle. Now, when you apply your what's it called, your Akianshi. Akianshi is also a candlestick, but Akianshi is smoother than the normal candlestick. So what I do is when I apply Akianshi, I will look for that my bearish candle. This is the bearish candle, and this is the bullish candle. Okay. Okay, let me.
How come they are having the same color?
Not exactly the same color. It's just that you are not. If you look at the color here, this one and this one are not the same. But let me make it something that will be more appealing to your eyes.
Contrast.
So I use gold and black. Okay. So now the black is the bearish, the gold is the bullish, right? So, but now on top of it, I have Akianshi. Okay, let me remove. Let me put it on the top. Let me put the candle on top of the Akianshi so that you see it. All right. So on top of the Akianshi, I have the candle. Can you see the candle? So every time I have bearish candle followed by bullish candle, you know what I will do? I will put a line on top of the two Akianshi that is on the bearish and the bullish candle. When the market pulls back to that line, I sell from there. Do you see that? I will not get a single drawdown as I enter the trade. You will not find this on any textbook. It is
It
not
was
written down
quickly
anywhere.
developed
Yeah, because I
by
noticed that even
Hakim.
when there's one, sorry to break in, I noticed that when you get into the market, even if you enter at this very point where the candle start opens, sometimes there's always a negative because
Yes.
it doesn't start counting from that point. So this takes care
That
of that
that's because
negative.
that's because you don't know this, right? It's simply because you don't know what I'm showing to you now. And it's also simply
Yeah.
because there's nobody that teaches Forex that has mentioned this. I'm telling you, I've not heard it before.
No,
I
you're
figured
right, 100%.
it, I figured it out myself. Okay. And I'm going to
That's
show you
very
now.
commendable.
Let's start from this up. Let's start from this up. From this up, this market forms a resistance. And then the market starts coming down. Bam, bam, bam. It formed the first black down, followed by the first gold up. And I say, when you see this, draw a line on top of the Ike Anshi that is on top of the black, and on top of the Ike Anshi that is on top of the gold. This space is your entry to sell. This space is your entry to sell. Anytime the market enters into this zone, that is your reversal entry zone. Come again. Someone, yes, go ahead.
Yeah. Can you take the Akianshi stuff away and explain to us when we have like bearish and bullish candles only, so that I can get the point? Are you saying when there is a break from like you break a particular low, going to retest?
Oh, don't worry. Let me just do it here for you. Look at it. Let me show you here. Are you seeing this high? Look at this high. Where I put this line now. This one.
Yes.
See this high? Okay.
Okay.
Now, this is a high, and this is another high. If you look to the back, to the left, there's another high here. Are you seeing it?
Okay.
Now,
Yes.
I'm telling you that when the market breaks above this high, do nothing until the market forms a bullish and a bearish candle. When the market forms a bullish and a bearish candle, draw a line behind the candle itself. If you don't have Akianshi on the chart, if there's no Akianshi on the chart, draw a line. Let me take out the Akianshi so that it will not disturb you. Let me remove the Akianshi now. This. Clone Akianshi. All right. So if you take out the Akianshi, I'm saying draw a line. So this is your high. And then this market breaks it. This is the one that breaks it, right? So this one that breaks it, the bullish candle, the low of the bullish candle, use the body. I don't use the wick, I use the body. And the body of the bearish candle, this space here is where this market will buy from if it's going to pull back. In most cases, you will see a situation like this. This market will create bullish, followed by bearish. And then it gives you another bullish. Just buy the market from this bullish. There's no point for you to wait for the retest. Because immediately it has already given you a breakout candle that breaks out from this very formation. Okay? Now look at this one. This one. See this candle that breaks this eye. After breaking this eye, it formed this and this, right? And I say draw a line behind this bullish candle. Draw a line behind this bullish candle and this bearish candle. I said this space is where you will get your trade from. See how the market pulled down all the way to the back of this bullish candle, and then it starts buying. But if I introduce Ikeanshi, if I put Ikeanshi on this chart, yeah, look at it very well. I'm not going to be drawing this line on this body. I will draw this line on this Ikeanshi. I want to tell you how effective Akianshi is compared to the real candle itself. So if it's Akianshi, you will see this market break and you see this market pull back. Now, when you look at it, you can see a candlestick formation here now. Are you seeing this doji star that is coming from this zone? Between this Akianshi and this Akianshi is a zone of interest. So you can do this. Two ways you can do it. If you want to be aggressive, buy the back of the candle. If you want to be conservative, put a trend line on top of this candlestick like this. Okay, mark this line, draw a trend line across this zone. When this market breaks this trend line, you can take the trade. Those are the two ways for you to enter. And this thing I'm telling you, you can go and look at the market over and over again. You will see it everywhere. Imagine this market that look at this market that fell from here. You would have just nicely come and put your line behind this. Look at this, bearish, bullish, back. Market pull back straight to that place, and then it drops. And also remember, that place is also a previous support. Look at it. That gives you even more confirmation that, oh, of a truth, this market is going to sell from here. And then when you see the first close below, this candle closes below the opening of this candle, you take the trade. If you want to do it by Akianshi, say, okay, wait until the market closes below the bullish Akianshi. The market closes below the bullish Akianshi here, and you come and do the same thing. Put your line below the back of these two Akianshi and sell from here. You still be in the trade. So I have this sell coming down. I have another one here coming down. I have another one here coming down. I can have 3 entries in this one go. I can have 3 entries here for this market that fell down like this. You see this one? This one is a bearish engulf. This one is a bearish engulf. You know. Does it make sense to you guys?
Yes, it does. Thank you.
Makes sense, but
this is the first time. This is the first time I'm mentioning this in the public. This is the first time. I've never mentioned it in the public before.
So what's Akianshi?
Just go and download Akianshi. Akianshi is everywhere.
Hello. Hello. Hello.
Yes.
Hello. Yeah, I've kind of observed that the bullish and the bearish has a direct proportional, and the way they move. Now, how does the market there takes the divergence if you're using the Kianshi as a kind of a trading method from this through the pattern that I'm seeing, where the bullish and the bearish are directly proportional to each other in terms of how they move. The Kianshi help if you are looking at it, say you want to take a divergence to sell or to trade.
So let me also, so in this case, let's do something. Let's do A. I think my A should be fine. Right. So all right. So let's do what's it called? Let's do something like divergence, right? Now, when you're doing divergence, now you know this Akianshi is also the same thing as it's also a candlestick. I've removed the candlestick now so that you see only the Akianshi. Akianshi on its own is also a candlestick. But the formula for calculating the high, the low, the open, and the close for Akianshi, it's a little bit different from the conventional candle. And Akianshi is such that every Akianshi that formed, the next one open from 50% of the previous one. It's not like the normal candle that we open from the close of the previous candle. If I put the normal candle now, you see that where this one close, that's where the next one will open. But Akiashi is not like that. Akiashi will open from 50% of the previous one. This one will open from 50% here. This one will open from 50%. This one, 50, no matter the size, it must be from 50% of the previous candle. Every Akiashi. So in that way, in fact, Akiashi is the best tool in the whole world to identify your trend. The best tool. Go and check in the whole world. It does, it give, because why? It takes out, see, if I put the candlestick like this, it's no longer looking smooth. But once I remove the candlestick, you see that all this, look at it. Okay, let me show you. See, if I put this candlestick, are you seeing that here? I have black candle, I have black, I have black, I have black. But if I remove that candle, can you see that everything is blue? It's smoothing out all those distortion that is caused by black, blue, black. No, it takes all those distortion out. So if the market is selling, it's selling. Now, even though the market is selling, look at this massive movement all the way down. In fact, let me shock you. Let's go to Eurotry, and let's switch to say weekly chart. Now look at weekly chart for Eurotry. Okay. Can you see how many years this guy has been going up? How many years this candlestick has been going up? Now let's take it to the monthly so that you see the total number of years. Look at it. This is from 2012. From 2012, this market has been buying. If you have bought this market by now, you would have made money more than Elon Musk since 2012 to date.
Yeah, but sir, at the time the candlestick is going on the bullish,
Euro what?
the trend is increasing it's going to increase in the profit. Also shows
Your network is
the candlestick at the bearish is also having the same. They're very proportional to each other. That's what I'm trying to gather to know how, and then how does this thing, both of them moving the candlestick at the bearish. Okay. My network is broken. Okay, I mean, how do you play, or do follow the candlestick?
Can you type your question in the chat box?
When the bullish of the candlestick is
network is
progression,
not
and at the same time, at the bearish of its candlestick is also progressing. They're really proportional to each other, and that is a kind of concern to me.
Type your question.
The network is not good.
Hello. Hello.
Type your question in the chat.
You type your question. Type your question. Type your question. Type your question.
Can I type it?
Yes.
Yes.
Please, Euro, what is this? This one on the chat.
Eurotry. Euro versus Singapore.
Oh, I see.
This is an exotic pair.
An exotic pair, yes.
TRY. Wow.
And it's a lot of money. So that's Eurotry. If you also check USD try, USD.
Wow.
You see USD try. You see they do exactly the same thing, both of them.
Yeah.
For many, many years now.
Wow.
This market has been buying.
is something
So,
is similar to S&P.
yes. So if you look at this formation, right? All you need to enter this trade, look at this. Let's look at this place. All we need to enter this trade is this market. If I put the candlestick now, can you see that this bullish candle and this bearish candle, they are my resistance, and my buy is going to come from the back of the Aikianshi. Are you seeing that? From the back of the Aikianshi. Okay, so I put these two lines there. If I take out those candles, you will see the Aikianshi that actually break out. Look at it, this blue one. So all this red, 1, 2, 3, they are pulled back. Okay, and they pull back to the back of this Aikianshi, and then comes this blue one. This is the buy candlestick. Okay, so if you put, you see that the candlestick there is strong. You see, strong bullish candle. So you enter this buy from here, and you say goodbye to poverty. From here till today, still buying. Now, if I take away the candle itself, you will see that between here and here, there's no red. It's just only this small red here. Everything is still blue to date, and it's still blue, still blowing and blowing and going.
So my own question now is, why do you even need to put the candle, since the Akianshi and the candle, they are forming the same trend?
No, if you look at it, so let me explain to you why you need to put the candle. You know, if you don't put the candle, you know the Aikianshi will not show you that, oh, this candle is black or this is blue. Aikianshi will just be showing you blue, right? But you see, when this market is coming back, let's say you are not looking, you didn't put the candle and you went and entered the trade somewhere here, or you went and entered the trade somewhere here. This pullback that you see now will not be. But if you put the candle, you will see that, oh, this month is a bearish month. Let me wait until I see a bullish month. And now you are getting a bullish month from the back of the Aikianshi on this your stop or this your range candle. As you get this stop from here, you launch your trade. So in order for us not to miss out what we are doing, let's come back to what we're looking at, okay? Which is the candlestick and the Akianshi. So that's like I said, you will not find it written in any book, right? This is purely something that I did myself, something that I discovered myself, something that I developed by myself, okay? And it works every time. And that's why you see that most time when I'm taking trade, I don't spend too much time in the analysis, okay? And if you come here, I've already developed systems, okay? If you look at this place, if you look at this line, you see this line is time frame from M1 to M5 to 15 to 30 to 1 hour to 4 hour to daily to weekly, right? So I can apply all what this means is, for this chart, this is a 1 hour chart. This is the first system, my first system for 1 hour, right? Can apply it here. Now, when I apply this system, it gives me a particular type of chart with indicators. I've already predetermined these indicators. Okay, this is 1 hour. Now, I can take this out, right? See, same 1 hour. This is still the same 1 hour. I can apply another of my trading system, which is this one, is still on 1 hour. Okay. Now, all the figures, remember, this is many things we do in Forex, they are mathematical representation. Okay. So the figures that you see, they are figures that are determined by the way the market behaves determines these figures. So most time you have to tweak these figures until it gives you what you want to see. Then you can ask, okay, when you try to do like a back test, see the historical performance of those figures, then you can ask, okay, I can rely on this strategy. Like in this instance, where this market has flipped down here and saying that, oh, this market is going to be selling, all I need to do is to look at where I'm going to put this strategy I just showed you now. Where is the first bearish and bullish candle stop after this guy flipped down, and where did the market pull back to for me to enter the trade? That's what I want to look at. And as soon as I see that, I take my trade and run with my profit. Okay, so I have a system that I've already developed for 1 hour. I have the one I developed for so still on this 1 hour. This is more like the small version of the trend. I also have a bigger version of the trend, okay, on this same 1 hour. And now on this 1 hour, the one I just put now is the one that has the 2-hour higher time frame candlestick. Okay. Now, if I want to put 4 hour, I can come here and apply still same on the 1 hour. Okay. I apply a system that has a higher time frame candlestick that is 4 hours. Okay, this one. So when I apply this one, now even though I'm on the 1 hour space, the candlestick I'm seeing is 4-hour candlestick. You understand? This candlestick that you are seeing here, each of them is 4 hours candlestick. Now, if I feel the 4 hour is too small, I want something of more precise result, I can come and put 8 hours. Okay, I can apply 8 hours. Now, the reason why I'm doing this is this. When I was explaining to you how to draw trend line, I remember telling you that you need to compress the chart, right? That when you compress the chart, you will see the holistic picture of the chart. So now on this chart that you are seeing right now, each of these candlesticks you are seeing is 8 hours. 8 hours candlestick. So look at it. When from this up here, this market break this line. You see this black line going up, all this black line going up, they are the trend to the upside, right? Now the market breaks the uptrend line, and then let me zoom it out a little bit so that you see the size, how big. Breaks this trend line, and then it forms a bearish candle followed by a bullish candle. And I said, put a line behind the bearish candle and sell any candlestick formation you see here. Take your sell from here, anywhere here. You can even take it from the top of this bullish candle. And then the market come down. Look at this as it's coming down. It formed a bearish candle and a bullish candle. And I say sell the top of this bullish candle, and the market keeps coming down. You see that? So I'm sure this kind of explain to you your mode of entry. But then the next thing you want to consider is that thing that you are looking at. Where is it coming from? Is it coming from a previous support zone? Is it coming from a previous resistance zone? That's another thing for you to consider. But in a nutshell, you have the entire concept in your hand right now. Because I mean, you cannot go through all these models, okay, and you don't have, some level of understanding, in terms of the chart itself. So with all the knowledge you have acquired from all these models, you now come here and you now start applying them. Okay, you start applying them to your trading. So I said, this is FSTM. FSTM, these are all the pairs you can trade in FSTM. Okay, these are all the pairs. They've increased the number. I think it's about 90 as of today, about 90 pairs. Okay. But then going beyond FSTM, you can get other brokers with higher pairs. Like for instance, the Reef. Like this, the Reef now on this, you have about 200 and let me say show all and see that is correct. About 245 pairs, yeah, that you can trade on, that you can trade from. Okay. There are other brokers like AvaTrade that gives you more. There are other brokers that gives you a whole lot for you to trade from. So here you have a collection of indices, you have volatilities, you have currency pair, you have cryptocurrency, all of them lump inside. So if you pull this place down, you can see the categories of the things that you have, everything that you have there. You have Forex, you have the Reef, you have basket indices, you have this, you have jump, like that.
Futures.
But if I log into something like let me see AvaTrade. Yes, if I log into AvaTrade, yeah, you are going to see even more pair. Okay, so this is AvaTrade. Now, if I pull this thing down, you see 800 and something pairs. This is a collection of energies, cryptos, equities, name it, stocks, a whole lot of stuff that are here. Okay, so you can choose anything you want to trade. Talking about applying the knowledge that you have gained. Then if you now log into to SM, that's why I keep most of this broker. Why? Because I might just decide that okay, today is Schlumberger I want to trade. I cannot find Schlumberger in FSTM, right? You cannot find Schlumberger in FSTM. So let me see what happened to that one. Let me take the Okay, well, okay, let me just take this out. So now if you look at this, you have 1,469 pairs to trade from. So much, right? So, and these guys, they have practically almost all the companies in this world. Any company, just think of a name of a company and type. Let's say Schlumberger, just type Schlumberger. You see Schlumberger there. Halliburton, you see Halliburton there. Facebook, see Facebook there. Meta, I don't think they've changed it to Meta on their platform. They are still using Facebook. Okay, so you see Facebook there. Just name the company is here. You can actually trade all this, okay, without having to be, a member of the company. You don't need to work for Total. You can just say Total or ExxonMobil. I don't need to work for Total first. You come here, you will see Total stock price. This is real. This is the life price. And then you can apply your trading knowledge to this to make money. Then the next is for you to now let me just show you this. If you go to FSTM, let me see. It's the same for every broker, but let me explain it to you with FSTM. So before you trade, sometimes you want to know if it's okay for you to actually take on this trade. So most time what you do, you come to FSTM. When you come to FSTM, you look for, when you come to trading, you look for okay, trading tools. Okay, trading tools. You come to trading tools. Let me see if it's inside here. It looks like they've upgraded their site. Okay. Look like they upgraded their site, but let me just see. I can pull it out. Market. Okay, yeah. You come to trading instruments. Okay. Look for this thing. Look for contract specification. Any broker, it's not, I'm just using FSM as an example. When you click on this contract specification, is going to show you all the instruments that you can trade. But what I want to show to you is this. Before you ever take that trade, you want to know if you keep that trade beyond 1 day, if your swap is going to be negative or is going to be positive. You can know if the swap will be negative before you take the trade, and if it's going to be positive before you take the trade. So when you come down to contract specification, you will see each of the currency pair. You see their minimum spread and their p-value, and then you come to the swap. Now, what it tells me, see AUD USD. If I'm trading AUD USD, my swap short is positive. My swap long is negative. That means if I choose to buy AUD USD and I decide to stay to the next day, my swap will be negative. And every Wednesday, this is across all brokers in the whole world. No, it's not restricted to one broker. Every Wednesday, there's what we call triple swap. I don't know if you've heard of it. There's what we call triple swap. That is this value that is minus 4.32 now. If you are moving, if you have a trade running on Wednesday and you didn't close it, and that trade moved into Thursday, it will be minus 4.32 times 3. That is minus 12.96. That's what your swap will be. This happens every Wednesday. Okay, why they do it that way, I don't know. Okay, but now you can tell before you take that trade that a CUSD CHF swap is minus 14 on a Wednesday. This will be minus 14.49 times 3. See this USD JPY, it will be minus 28.5 times 3. If you are selling, but if you are buying, this 13.06 will be 13.06 times 3. So your swap will reduce your profit if it's negative and will increase your profit if it's positive. Okay, is that clear? So take note of this, because sometimes you will enter the trade and you will notice that your balance is not tallying with what you have. Go and look at what you are trading. Maybe you are trading a currency pair with a high value of swap. And you see this value can go so high, depending on the currency pair. Let me see if we can see more here. This is 7 of 7. Let's change this to say, let's say US stock. Okay. Let's see.
Guys.
Okay, what FSTM did was they just selected some few things to display. But I know that, okay, let's see if we can, let's see something. Let's see Euro try. Okay. Because you can type, I think you can type it and see. See Euro try. Can you see your Euro try? If you are trading sell, see your swap. And if you are trading buy, see your swap. Now, you don't know about this thing, okay? You don't know. Oh, I don't use Singapore. Sorry, it's Turkey. Turkey lira, not Singapore. It's a mistake. Just to note. Imagine that you take this trade buy, and on a Wednesday, this value is going to be multiplied by 3. How many people?
Without multiplying it, this is very high.
Yes, even without multiplying it is high. And then
It's
you now
very high.
that keep this trade beyond Wednesday, this is going to be like times 3 is going to be like almost 19 something, right? It's a lot.
It's a lot.
Okay,
It's
to
huge.
part of your account. So that's why. So people don't know these little things. People don't know. They just want to trade. If you just want to trade, please don't say the broker is collecting your money. It's you that did not do the right thing. Look at the trade very well. So if I want to trade this guy, I will want to wait to see a trade in the said direction so that I can hold this trade for a long time. Sometimes if swap can be.
Hello, sir. Can you
Yes.
hear me?
Yes.
Sir, please, can you call the name of the place again? Let me go and look for it now on my particular broker I'm using. I'm not using FXTM, but I'm using another broker. Can you call the name that you just called now, please? Sorry. Okay.
Contract
Okay,
specification. Look for
thank you, sir.
contract specification. You will see it. Every broker has it. You see the detail of how your swap affect your trade there. Okay, the next thing I want to show to you is on your trading view, which is the most popular. Trading view is the most popular of all the web-based trading platform. Okay. On your trading view, I think I've showed you trading view before, the way trading view work. You can use the free version, you can use the paid version, it all depends on you. You can use it to determine whether you are going to enter the trade or not. Okay. So if I come here and I come to product screener, yeah, I can decide to say I want to screen stock, I want to screen ETF or Forex or cryptos, it depends. So if I say I want to screen Forex, I click on Forex, it will bring out the Forex pairs and how they are doing for me. This is 42 pairs because I'm selecting only the minor. If I select the minor, including the exotic, that will jump to like 108 matches. If I say all, select all, that is 6,113 currency pairs to trade from. Are you seeing that? 6,000. Okay. So you just want to, so let me take just the major so that, these are just the major. Now it tells you what each of the major is doing. But if you want to see the technical, you need to click on the currency pair. So I click on AUD USD. Remember in one of the presentation I did before, I showed you the smart gauge that I said it comes from Smart Trader. Yeah, you can also see something that looks like the result of the smart gauge here. Okay, like this. So this is showing you your daily result. This part tells you the effect of moving average on this currency pair. This part tells you the effect of oscillators. The combined result of this and this is your summary. So the summary for AUD USD is a sell. And now, don't be surprised. This is how it works. So these are all the moving average that they use. So they use moving average 10, moving average 10, exponential, moving average 10, simple. Moving average 20, exponential, moving average 20, simple. So they put all the moving average. They come here, they use all the oscillators. RSI, stochastic, CCI, average directional index, awesome oscillator, momentum, MACD, all these ones put together. So the combined result of what this guy gives to you is what you see here. The combined result of what these guys they give to you is what you see here. The average of this guy and this guy is what you see here. So this is daily. I can just go to 4 hours and say, what is 4 hours saying? 4 hours is saying buy. What is 2 hours saying? 2 hours is saying neutral. So remember on that smart gauge, the difference between this one and smart gauge is that I won't be able to see multiple time frame at a time. Well, I need to check. Maybe if you subscribe, you might have the option of having split charts that can show you multiple this at a time. But if you like compared to the smart gauge, you can see 30 minutes, 1 hour, 2 hour, 4 hour, 1 day. You can see all of them at a glance in one shot and say, okay, if all this time frame are lining up in the same direction, then you want to pull the trigger. But then they've already given you a summary, okay, from the overview. So if you come to the overview, this instrument, they've already given you a summary of what this instrument is doing. So if you go back to that screener and go to Forex, so I'll just go to my this. So yeah, I already have them. So if I come here and I say I want to see for the major pairs, if I click here for major pairs, I'll just see the screener for major pairs. Okay, this is what the major pairs they are doing. Okay, this one is telling me buy, sell, sell, sell. Okay, so and if I come here and choose performance, performance will give you what each of these currency pairs they are doing. Okay, now this is 1, 2. You don't need to know how to trade to use this. Even if you don't know how to trade, you can simply come to this, and as soon as I click technical result, see the technical result is giving you what the MAs are saying and what the oscillators are saying, and this is the technical answer. Okay, so it's telling you that Euro USD is buying, USD JPY is selling, GBP USD is selling, AUD USD is selling, USD CAD is selling, USD CHF is selling, NZD USD is selling. This is the result of all this analysis. This analysis, all of them combined together, produce this result for you. So you as a trader that don't know how to trade at all, you have not even seen chart before, you can just carry this thing and trade. You can just pick this thing and use it as a reason for trading. Why you that is already a trader and you already understand the concept of trend and everything, you can come here and look at this and say, oh, they say Euro USD is buying. Okay, you now go to Euro USD chart. Here's Euro USD. You look for Euro USD, you apply it and say, okay, this buy that they are talking now is from which time frame? Which time frame is this buy coming from? So let's see. Let's see, overview. I'll show you. Let me switch it to the one that you can see. Or screener, major. Okay, so you see the time frame. Okay, so here's the time frame. So you see, this is based on the daily time frame, right? This information is based on the daily time frame. So if you change this to another time frame, this whole thing will change. So you cannot use, since this is daily time frame, you can use that already know how to trade, that already have an idea of trading. You can use this as your trend and say, okay, they said the market is trending, is going to buy. So now you now come here, Euro USD buy. So you look here, say Euro USD is going to buy. So what am I looking for? I'm looking for a buy opportunity. So where am I going to see a buy opportunity? Okay, let's see. So in this case, you are going to wait until the market probably break this high, or you put a trend line, it's a trend line from year to year, and you wait until the market breaks that trend line. Okay, when the market breaks that trend line, you will now apply that formula that I told you, the back of the candle. You know, so this one breaks, but then the back of the candle did not hold, right? So the market came down. Now this one is trying. Let's see, this one is not also working. So me, I will target here. When the market breaks here, then I want to look to the back of the candle for my pullback before I take a trade. So that's basically how you can use TradingView as a guide. You can also use baby pips as a guide. If you come to baby pips, we've talked about baby pips before. There's one new tool that baby pips recently launched. It's called Market Make. If you click on this Market Make, it will show you the strength of each of the currency. And I say, once you see the strength of each of the currency, you want to trade the strong versus the weak, or the weak versus the strong. You cannot trade too strong. You cannot trade too weak. In this case, this is CHF. This is JPY. CHF is telling you buy. JPY is telling you that I am weak, meaning that CHF JPY will be buying. So if I come here, I look for CHF JPY and apply it to my chart, okay, and it should be buying. You see, all this action that you are seeing, this candle that you are seeing now, is coming from the fact that this thing is coming from the fact that this thing, this one is strong and this one is weak. JPY is weak. Now, JPY has been very strong for some weeks now. It's very strong. In fact, JPY has been pulling everything down. So if you go to daily chart, you see the massive pull down. JPY been pulling CHF down all the way. Now CHF is trying to buy. Okay, you pull everything down. JPY, all the JPY. If you go to Euro JPY, the same thing. Go to GBP JPY, the same thing. I see the strength of what one strength can do. Look at it. CAD JPY. From here, straight for the same NVT JPY, AUD JPY, the same thing. Now, if you are able to figure out this strength of JPY, you can actually be on all these currency pair at the same time. Okay, and if you come to this guy, you can actually come and select. There's what we call market wash. Let me see, market wash. Market wash. Okay. So you can actually select a set. So maybe I want JPY pairs. I can just come here and say JPY pairs and click. When I click, it will give me all the JPY pairs. Look at this. Euro JPY, USD JPY, CAD JPY, GBP JPY, AUD JPY, CHF JPY, and NZD JPY. And also, it will show me their performance. Are you seeing their performances? It will show me their performance. This performance, you can change it to, you can decide to say you want to see PIP or you want to see, what's it called? No, let me sort it again. No, that's not what I want. Well, I don't know if it's not working. But you can decide to say you want to see like the percentage of move, okay, than seeing the total pips that it has moved. So this one is showing you total pips that it has moved. Okay. So you can use this as a basis of as a guide. Or you can also, if you I don't think my subscription is valid. Let me see. I think my subscription. Okay, I'm able to sign out. Let me sign in and see. That's okay. Okay, so yeah, fine. My activities are there. So if you come here now, yeah, because some of these tools are not available to people that are not paid. If you are paying, this thing costs about $9 every month. Is it $9 or $7? I think either $9 or $7. You pay $9 every month for it. Then you now have access to some of the premium features. If you are not if you are not subscribed, I don't think you'll be able to see that market watch that I just showed now. Okay. Then you can also see the currency heat map here. If you say heat map, you can see the currency heat map. So all these are things that you need to familiarize yourself because there are tools that you need to trade the market. With all this, you can decide to make up your decision of what to do. Then before I jump from trading view, there's something I wanted to show to you, which is that Fibonacci. Let me just open any of the currency pair to do it. So if you come here and you say click on full chart, okay, So it takes you to the candlestick chart. This is the candlestick chart. This is AUD USD daily chart. Okay. So if you come here and click here, this is the Fibonacci tool that we're talking about. Okay, you can see it. Okay. So in this case, let me delete this and apply it properly. So I come here, pick the Fibonacci tool, I move it from support to resistance. Okay, I stop there. Now, you see, in this case, the market came down to 38.2 level and then find its way to buy up. Okay. Now, this can also be taken like this. Pick this, draw this thing all the way down to this point, and then you say this is a retracement. Okay. And now it has retraced to 78.6% level. Got it. 78.6. So if you pick horizontal line and drop it here, this is 76 level. Look at it. The market has come to 76 and is selling. Now, as this market is selling, it's going to sell to the equivalent extension level of this 78.6, which is 1.27, on the extension leg. So try as I won't be able to teach you everything, yeah. But take your time, play with it, fumble with it. You'll be able to make sense out of it. Okay, there's also another site that's called investing.com. You can also try that, create an account there, and then you can make some money. And then lastly, before I close, I'll take you back to deriv. Okay, so this deriv, unfortunately, I don't think I have money to trade today. Yeah? This deriv, okay, let me switch to demo. So this deriv that you see, everything you see here, you can trade. Okay, it all depends on you. But what I've mastered very well is to trade with smart trader. Smart trader is a feature that deriv carried over from binary.com, because this company used to be binary.com. That's the name. They changed it to deriv some years ago. Okay, so this deriv, what you can do, let me switch this to demo so that I can just do some demonstration for you. So if you okay, very good. Now the market has not opened, so all your currency pair, they will not work. It's only synthetic that is working right now. So these are the things you can trade with synthetic. You can trade the bear index, the bull index, the jump indices, then the volatility indices. Of all these, I said trade volatility. Me particularly, I prefer volatility 100. Any of the volatility is fine, but don't do the jump. The jump are very volatile. Their movement is very erratic. Don't do the volatility with X. They are very erratic. But you can do bear index, you can do bull index, you can do volatility 10 to volatility 100. Any of those are fine. The next, this is just one of the application of the knowledge that you have gained over time. Like I said some people, they only believe that is when the person that is teaching them does it that it works. And it's not true. What I want you to feast your minds on is this. Yeah, you can do, I'll show you two strategies. Making money is not rocket science. I mean, it could be very easy and it could also be very difficult. Okay. Once you have mastered the art, it will no longer be difficult for you. So first, this chart is normal chart. And this chart, you can compress this chart. For you to compress this chart, look at this thing. Are you seeing this small scroll bar here? When you put this thing, this scroll bar will change to this horizontal arrow. You can move it. As you are moving it, you are compressing the chart. Move it all the way to the end. Means that you have compressed the chart to the barest minimum. If you want to see this chart in candlestick, you come here, click on this stick, select 1 minute. It will give you 1 minute chart. If you want 5 minutes, it will give you 5 minutes chart. Any time frame you want, you can use, okay? But I prefer to use 1 minute. Now, what I just explained to you now, you can apply it to trade this stick, okay? Although it's not very, very accurate in terms of when you see the bearish and the bullish. But let me use this as an example. Every time the market is coming down, okay, I can also put this down so that you see it clearly. Every time the market is coming down, when the market is coming down, it's going to create bearish, 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 bullish, right? So I'm telling you that if the market creates bearish, 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 and then boom, it creates one small bullish here. You see this small bullish. I said your sell is going to be from the back of this bearish candle, right? So in this case, you can wait until the market tick to the back of this candle and then you put a sell. You enter sell. Okay? It's just like this one. Now look at this one. This market came down. Bearish, 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 and then it give one bearish, one bullish. The back of this bullish, this bearish, is where this market is selling from. So if I just come here now and say sell, let me change it to 5 ticks. 5 tick. I like doing 5 tick. You can do up to 10 if you want. And let me say I'm doing $200. Okay. See how it was. So now I'm seeing that. Remember, I'm looking at this thing. This also gives me an idea of what the market is doing. Okay. So, but yeah, the market has given me sell. It gave me a bearish engulf that the market will sell, and then it looks like the market wants to buy. So I'm targeting that market that wants to buy. Once you give me a sell information like this, I'll now say sell. Now, when I say sell, if this market moves 5 ticks in the sell direction without breaking the line, then I'll be in the money. But if it move 5 times, look at it, it moved 5 times, but it didn't break below this line, then I will lose, and then you see the loss. So I target it again. Maybe I entered it too early. Now it has actually done the movement I was expecting it to do. But let me see if I can still continue to take it. So I put a sell again in that same direction. Now, so it's going to stay down, okay, after the fifth push. So you see, it's a contract one. Now, when you do this, somebody was asking me what's the difference between stake and payout. Let me just explain it here. Look at this. When you put this value here, what I put is 200, right? But look at the final price. The final price is 390.54. That is to say, my profit is my final price minus my risk. That's my profit.
Okay.
I want now that you are in this class, can you see how effective this thing is I was trying to explain to you? That when the market comes and give you bearish, followed by bullish, the back of that bearish candle is where you sell from. Can you see how this market is selling right now? This is 1 minute. At least 1 minute can prove to you if the strategy is going to work or it's not going to work. I just want you to see that what is happening right now in the market. And I also want you to see that even this place where this market is falling from, look to the left. You will see a bearish candle followed by a bullish candle. The top of that bearish candle is where the sell is coming from. Look at it. Can you see that?
Yeah.
So just to mention, okay. So now this action, you can do it more than 1 million times in a day if you have the money. All you need is this Forex knowledge. You just need this knowledge. And you have the knowledge. Just apply this knowledge to this chart and you will make this money. You don't have to wait for me to help you to tick it. Now, there are factors that affect this tick. One of the most important factor is the strength of your internet.
Yeah, so this night it was bad though. In
The
fact,
strength
the
of
network is useless.
the strength of your
Network
internet.
causes the problem.
If your internet is bad,
Jesus.
because when I say enter, I'm actually looking at it that okay, this candle is going to continue to sell. Now, if your internet is bad, it will delay your entry. Your entry will not enter at the point where you envisage for it to enter. Okay. Now, look at what is happening now. If this market breaks this low, look at this low here. If this market breaks this low, after breaking the low, the first candle that will do bearish followed by bullish, the back of that bearish will mean something special for us. We have to start considering. Can you see the sell that I said that? You see how it has sold. Now, this same trade, you can decide to take this trade with minute instead of tick. You can say, I want this trade for 2 minutes. You say 2 minutes. I say in 2 minutes, this trade should go in my favor. So I say sell. Okay. Now, when I say sell, now it's not going to just do tick, tick, tick. This time, you click on, when you click on view, you want to see what is happening, click on view. You will see your chart, see your entry, see your chart. This one, the beauty of this one is you can close the trade anytime. Now I'm making $60, I'm making 57. Oh, do I want to wait? Now it's 44, now it's 21, now it's 55. I can say sell this market right now, and I've made $60. You see that? You can, this one now you're not going to be using tick, you're going to be using minutes.
Okay, with this one, you can actually
Can
gain.
control this. Yes, with this one, you can control. If you use stick, you cannot control. Once you enter, you must wait till the end. But if you use this one, you can control your trade to a large extent. And if look at it, you can decide to say 10 minutes. Let's say 10 minutes. And maybe you are here. And then this big candle came down, brah, you say sell. Count these candles from here. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. At the 10th candle, you are below your entry. You have made the money.
But it's only on Smart Trader.
Yes, it's only on Smart Trader, but this smart, you can also use. Okay, so let me switch to the main.
No, I'm okay. I'm on the reef.
Yes, you can switch to the main deriv page and still do the same thing there. If you come to the main deriv page here, you can still do the same thing.
How can you cash your money? Because it's not as straightforward as FXTM. How do you cash your money or withdraw rather?
If you want to withdraw your money, okay, unfortunately, I don't withdraw my money, but let me show you how to do it. You cannot withdraw demo, right? Yeah. Maybe by the special intervention of the Holy Spirit, we will withdraw demo.
Oh, yes.
Now, look at this thing I was telling you now. I say if this candle break this low, and we have the first bearish followed by bullish, it will mean a lot for us. Can you see that? Can you see that from the top of the bullish, this market has came down massively with a big candle? You see, this one, I've told you, you will not see it on any book. Just count yourself privileged that I'm in the spirit to release it for you for free. You will not see it anywhere. Because even the people...
Thank you for the release.
No problem, thank you. Even the people that created this chart, I am sure that they don't even know this relationship exists in the chart. They don't even know. It took it took more than 5 years for me to figure this thing out. More than 5 years of continuous study, continuous research, continuous looking, continuous session for me to figure this thing out. Okay. So these are what I'm showing you now is application of the knowledge that you have gained. You already have the knowledge now. Now go and use it to make money. This same set that is coming here, you can also look at it from this perspective that, oh, this place is a low. The market has broken this low here. At this point, the market break the low, and then the market pulls back to this low. Now, this low is now future support that has become past support that has become future resistance.
Battery don't go down. Shit.
You understand? So this one, you can, I've made, let me even see, who was I talking to which day? Timothy, right? Because now you can, a lot of people have problem funding this trade. Now let me switch it to real account so that I can show you how to withdraw. For you to withdraw, you will come here, real account, US dollar. You will come here and then you will come to cashier. Look at this, cashier. Click on cashier. Even when you want to deposit, it's the same thing you will do. Come here, click on cashier. Okay. Have I not changed it? I have not changed to them. Change to real
I've
account.
tried depositing it. It wouldn't allow me. I haven't had to use some other wallets. Like I used this. There's one wallet there.
Let me show you
It was there, but it was not dropping.
let me show you the wallet you will use that is easy. Use online Naira. Finish. In seconds, your money will be there. And when you withdraw in seconds, your money will be in your account. And when you withdraw with online Naira, you can actually determine the speed of the money coming to your account. Online.
Can you withdraw USD directly to your domiciliary accounts with government
Yes.
putting eyes on it?
No. You can withdraw
Okay.
USD to your account. There's no, it's your money now.
Okay.
It's your money. Nobody's going to put eye on it. It's a genuine source of money. Okay. So you are not doing something that is trick. You
Money
understand?
laundering.
You are not doing money laundering. Is
So
in
that means
fact
I have to create
it's a
I have to
more valid means of survival than even some other business, because say, I'm sure if you look at your what's it called, if you look at your account, you will see that they are sending you your summary of profit that you made every day and losses, and at the end of the month they send you a monthly statement of account.
Yes.
That's an evidence you can take to any court in this whole world, and you will be justified that you made your money legally.
Okay.
Do you understand? So you
So
don't.
it means I
So
you have to open another domiciliary another account on online Naira that has USD, because I already created the Naira.
oh, they only do, you don't hear the name online Naira. They don't do USD. See, this is the history
Okay.
of my withdrawals. These are history of my withdrawal. Look at it so that you see. Can you see that? From online Naira. This is online Naira alone. So anyone who you see pay out, they pay to me. I receive the money. Understand? I receive the money. In few of them, you see few of them that me I deposited. Every other thing that you see there, they are withdrawals that I made. And now when you withdraw from the reef, you come here and you say withdraw, you select withdrawal. Okay. When you say the withdrawal, you type the amount. The system will ask you to, once you place the withdrawal, automatically the system will send you an email. Okay.
Yes.
So if you go to your email, right there, that email would have been waiting for you. Okay. Now, two emails they will send to you when you withdraw. Okay. The first one is, so you receive the first one is a confirmation that they have received your withdrawal request. That's the first one. Let me see this one. Yes, so this one means that they have received your withdrawal request. We have received your withdrawal request for $400. We aim to process it within 24 hours. Then, after a while, you receive another email that will follow this one. Okay? That email is the one that will now confirm that we have successfully processed your withdrawal request of this amount. So you see the trace ID. If you look at the trace ID, you go to that first email, you get that same trace ID. It takes 3 business days for this money to enter your account in Nigeria. 3 business days.
And
So
so
every
that's
time,
what I'm saying. Will you be paid this USD
yes, now
in
you pay.
Naira online Naira?
So this is not online. So look at it. Let me show you again. You have the option. You have the option here of using card. You see here?
Okay.
You can deposit and withdraw here. So if I say withdraw here, I have the option. Okay, it's not allowing me because
There's
I
no
have
cash.
fund. Yes. So if you have fund, okay, let me go to deposit. If you click on this deposit with card, you will see card automatically there. Now, if I click on this Visa card, now this is card region. When I click on this card, you will see that my card is already stored in the system. All I need to do is just to put the amount and boom, that's all. You don't need to do
Yeah, I
anything.
get it. I have to get my dollar card. That's what it means.
Yeah. So with your dollar card, you will receive dollar. But with online Naira, you
Only
will
Naira.
only, what they will send to online Naira is dollar. But the beautiful thing about online Naira is this. Look at online Naira. Let's go to the dashboard. The beautiful thing about online Naira have the same exchange rate in and out. See their exchange rate as of today. 1,590 Naira to $1. If you want to deposit, they will use this rate. If you want to withdraw, they will use this rate. And I can tell you for free that online Naira rate is higher than all the bureau de change rate that I know in Nigeria.
Wow.
Yes. It's
Okay.
always higher. Always. So in order for you not to delay, because now instead of me to be waiting for 3 business days with the other dollar, I just withdraw with online Naira. And as soon as it gets to online Naira, I place a withdrawal from online Naira. When you place the withdrawal from online Naira, they will ask you, do you want the money to come into your account in 30 minutes? Do you want it to come into your account in 1 hour? Do you understand? The faster you choose,
More money you pay.
the more the interest you pay. You understand? So it depends on you. Any option you want to use.
Always use option standard. It's better.
But
So
how can you fund it from abroad if you're not in Nigeria? I'm finding it difficult. It won't take my card because I'm using VPN.
are you talking of the RIF?
Yes, the reef.
No, it will allow your card. Now, if you are using the VPN, it will allow your card. It will not prevent your card.
It's not allowing my bank. It's rejecting my card. I've tried it several times, so I had to use some of these wallets.
Sorry, sir,
Okay,
please.
so
This online Naira that you used, sorry, the password you used, was it a long one or this? Because I'm trying to use the regular passwords I use, it's rejecting all the passwords I'm using.
The
I wanted
first
to
letter should be capital letter.
I literally am trying it, all my normal passwords with capital letter with
wait
synonyms.
now, wait. Do you have account? Have you created the account before?
I'm trying to create an account for the first time.
Okay, so look at the wait, let me drop my referral link for you. Click on my referral link. Then look at the password criteria. Let me see. Here's that dashboard. I'll just drop it on the message box. Just click on it. When you click on it, go to create account. Okay. Copy link. So just click on the link. Okay. Then go to create account. Let me see if I can direct you here. Timothy, you did it now. It was easy now.
So if you say MasterCard does not allow withdrawal.
Oh, okay, good. Please do not use MasterCard. Use Visa card. MasterCard has issues. I was using MasterCard before, but after a while, they had some issues. And it's not just for only the RIB, it's across, it's global. So you cannot withdraw to MasterCard again. So it's better
So
to
you
use
can,
it's
so you
better to use.
cannot you cannot fund with MasterCard as well, right?
I think you can fund, but you may not be able to withdraw back to MasterCard. And there's a rule. There's a rule that when you fund, you must withdraw what you fund back to the
The same
source.
card.
Oh,
Yes.
yes. First, before you can withdraw to any other option.
Okay, because I've tried it, it didn't work. I was frustrated. That's why I was calling you the other times. If I had to even use Creo, I had to create a Creo wallet, funded the Creo wallet, use the Creo to fund the account. I could see it, but it was not dropping into the deriv.
No. It works 100%. It works
But
100.
does it work immediately?
I use screen now. It's instant. Yes, I use screen.
Well, why
I
is it
use
not
screen.
working for me? Because I have a screen account. I have the app. I funded the app. When I try to drop it on my deriv, it will not allow me.
No, it will.
It will
Maybe
just,
there's
it
some.
will just show me.
Wait, maybe there's something you are not doing right. Maybe there's something you are not doing right. In fact, Skrill is even more effective. Let me see my screen.
Sorry, I have a concern with Scree. Scree, when it comes to withdrawal, there are issues with Scree. Withdrawals. How do you withdraw with Scree? I've
Wait,
done it before. It's giving me issues with Scree.
No, it goes
wait,
back to the Skrill account. From the Skrill account, you can send it to anywhere you want to send it to.
wait
And
now.
that is the issue. No, it goes to the Scree account, but can you send it to your Nigeria account? That is the issue.
No, to the account you funded it with.
Okay, now
No,
you fund.
guys, this thing now. I'm opening screen for you now.
Okay. Yes, good. Thank you.
Cross walk. Okay. Authentication required.
Yeah. Don't bring up the slip now. Probably this one. Which one? She said don't bring up. Say don't bring half. You should look at it now. My red from the dog is so. What have you been? Oh, stinks. Where's the apple? I mean, in your sauce. That's so strange. Musical.
So this is screen, right? Now you need to, so if you come here, transaction history, right? Let me see USD or transaction type. It's been a long time I used it. Let me see if I can see. Okay, or transaction type. I'll see the Okay, let me see. We share now. Let me try first two. I just want you to see some of the withdrawals and the way they come. So this is 20, 2023, 2020. I don't think I can see all those old. I don't think I can see all those old. But what you do, if you come here, here's your setting. Okay, so let me see withdrawal first. Yeah. So see, you can set your account. I don't know if you have set up your account or set up your card. So if I say I already have something stored. Let me just see what I'll see it there. Okay.
Have you said to me? And you're not going to get me yourself again.
So not this one.
And I was really the last one he sent me. What's for them? Okay.
Also, so let me see this one. So you can see my card there. See my card. Once you have added your card, you can withdraw, you can deposit.
Okay,
Yes.
I don't want to argue him, but I know he's saying country not supported when it comes to Nigeria, comes to withdrawal recently. Yes. So you guys should double check.
That means it's new.
Yes, from Scree. Yes.
New.
So I want you guys to double check before you do it. I almost wasted some funds there.
See what the Nigerian government is costing us.
So to ask you, do you want the money to be available for both? Is it lottery or what do you call it? It gives you an option on how do you want the money to be available. What do you choose?
That one, I'm trying to remember how it works. So it's been a long time, but what it means is that if you choose that the money should be available, that is, you
Gambling site.
Can use the money on gambling site. If you choose that you want the money to be available for gambling site, there are some other sites that you won't be able to use it.
So which of them do you choose? Because I said yes, and I could see the money on Derive when I click on Skrill, but it was not dropping into Derive.
I think is the second option you are supposed to choose.
Is it yes or no?
Yes or no? I think it's a no. I think it's the no you are supposed to choose.
So it means that you can use this money for any purpose except for gambling.
Yes, that's correct.
Okay.
That's the one you're supposed to.
I'm doing it right now, so at least I can clear that out.
Yeah, that's the one you're supposed to choose.
If you just bear with me, let me just.
Scree. In fact, Scree cannot even send. I withdraw a lot of money using Scree, right? But Scree cannot send dollar to Nigeria. There are a lot of restrictions with Scree. In fact, Scree is even better than Netella because Netella, they cannot even send to Nigeria at all. So that was why I had to use Scree. So I was able to withdraw my money, to Nigeria with Scree. But then they don't send dollar. So what Scree will do? Scree will send euro. Even though your account is dollar, the money they will send to the bank is euro. So when it gets,
I've just funded my Skrill account with £20.
Okay.
So let me try and see if I can deposit. It's already showing 20 on my Skrill account. So let me go and see if it will drop on the Derive.
To Derive, then
Derive.
You put your username, put your password.
Yes, I'm already there.
Are you able to trade from the UK?
No, I'm using what do you call it? VPN.
From the UK.
Yes. Because normally with normal browser, it won't let me even open Derive.
You can do a VPN. I've done with VPN before in China.
No, sir.
If,
I have to
if,
buy VPN. I'm using VPN.
if there's one country that is
Yeah,
more
okay.
difficult, is China, and I did it in China and it worked. So I believe it will work.
Because I
See,
have somebody in UK who have a challenge with
what you cannot do in UK is that
setting up.
you cannot use MT5. I don't think you can use MT5.
Mm.
You can only use MT4. There are
So you can
some policies that restrict people from using
mm.
MT5. Okay.
So you can use MT4 and then this is the right.
Thank you very much. My battery is gone. Thanks very, very much for the timing,
All
the
right.
learning, the exposure, and the benefit I've gotten. At least I've gotten some cool dollar within me, although this evening my network messed me up. But it's okay, it's part of it. Thank you, sir.
Well, and what you need to also know is that when you are trading, most especially if you have to do this derive, try to ensure that you know when to cut your losses if you notice that you are losing.
Yeah.
Okay. If you let's
So-
say you can decide to say anytime you lose once or twice, you will stop. One of the
Yes.
problems is that people will want to try to make
Match up
up
what they
their
have.
loss.
Yes.
And in that way, you will be entering into more losses. Okay. So just try to avoid that.
So, Prof, I can see the money is in my derive account, but it's saying balance payment not available. You cannot pay with your secure balance now. So this is the problem I've been having.
No. Wait first. Are you depositing the entire $20, £20?
Yes.
Then make it 19 or make it 18. Because in screen you cannot, there's a commission that they take. Okay. So reduce that volume that you are depositing. Usually it's a standard value. I can't even remember, but it's a standard value. So instead of depositing the entire £20, put it £18 or £17.
Okay, let me do that. Let's put 17.
Okay, Chief.
Yes.
Please, can I ask you a question about this online Naira? I'm trying to open it now. I don't have it. I've never had it before. So I'm trying to do a new user registration. What's the process? I've been trying to use a password and it's been rejecting it. Like I've tried it like 2-3 times.
Let me see. I dropped a link on the chat group. I said you should click on that link. Did you see it?
For the online Naira, right?
Yes.
Okay. I
Click
can
on
check that.
Then let me see. Yes. Okay, sign up.
It's good you drop all your links, so that people can use it.
Okay, I will.
All your referrals.
You register as individual. Did you see this? Did you see this place?
Okay. No, I've not got to that place. I'm trying to open your.
Oh, sorry, sir.
What?
Yeah, good.
The place where? Okay, I've seen it.
Good night, sir. Bye, bye, sir.
All right. So click on this as individual. Okay. Then, because they are very straightforward, as far as I've been using them for a very long time.
Okay.
So now look at what I want you to see. Look at this place. Your password is case sensitive and must be at least 8 characters long, including at least one letter, A to Z, one number, and one of the following special characters. Look at the special characters here. If you use any special character that is not here, it will not work. You can use @ you can use question mark, you can use percentage, any of the question characters, you can use any of these ones.
Okay.
So go and try it again. It should work. It's not. It's
Okay.
not.
So, Prof,
done
I've done it. I've done the £10. I've done £15. It's still saying a balance payment is not available. You cannot pay with your screen balance now.
Okay, so what I think you should do, how long have you been having problems?
Since the last time we talked about it, I told you I was going to get a VPN. That's over a month ago.
That's complicated then.
You know, I had to buy a VPN of about almost £80. You know, and
Can you check Skrill? You will see their support. Contact Skrill support and give them your screenshot the problem and send it to them.
Okay.
They'll be able to solve it.
Okay. Thank you.
All right. Anybody, any other person have any other question?
Chief, may I call you back later? I still have a few things on some of these accounts, like on the Screed and opening accounts on the other platform for trading. What's this one for trading? Okay, Derive.
Okay, okay, so oh yeah. No problem. If you have any question, just drop. You can contact me on the WhatsApp group. You can contact me on Facebook, and I will answer you.
Okay,
so
thank you very much.
Let's bring us to the end of this series.
Are we having these recordings, for reference purpose?
Yes, I've dropped on the group severally for you guys. This is the YouTube channel. Okay, so you come here, you see ZipatFX. If you come here, everything we've done, I drop them here. It's there. Just go there. I can see. Okay. So I view these things. So okay, I see. Yeah. So just you can download it if you want. You can view it. You can watch it. You can download it. It's up to you.
You shared tonight. Thank you very much.
Yeah. All right. No
Thank
problem.
you. God bless you.
Thanks a lot.
Thank you very much. God bless you massively. Thank you,
Those
Prof.
first ones, I did there.
Amen.
Okay, Prof. Thank you. Good night. Thanks a lot.
Mr.
All right.
Pat.
Thank you, everyone.
Mr.
Thank you so much.
Yeah. I will make arrangements next week. Amen.
Mr. Pat.
Yes, sir.
Those first lecture, the first one and the second one, are they on YouTube?
Yes, they're on YouTube.
Okay. Thank you. God